Hello, everybody. Welcome back to another episode of The Market Open. It is Tuesday, August 15th, 8:46 a.m. And oh boy, do we have a lot to talk about right now. This morning, we got a flurry of economic data. And that economic data, I think the live said 8:45. Sorry, I meant to say 8:45 a.m. when we got started. I scheduled it last night, and it was easier because I didn't have to worry about scheduling it this morning, but I scheduled it for tomorrow night or whatever. But no, we're live. We're in the morning. We're here. We got a lot of data. We got a lot of data. Today's going to be a really interesting show. We've got a ton to discuss. Jobs data this morning, retail sales this morning. All of that has implications on the stock market. Without the jobs data, without that retail data, I think that is what's kind of been scaring the market for the past couple of days. Well, we got that data, and that data came in pretty good. On top of that, at 10 a.m., we are going to have Eliano from Palantir, who is a Palantir employee, join the show. And he's going to be talking about the merch store launch that is officially live today. If you're on Twitter, you're seeing people already put in their orders for different merch. It's Palantir. It's store.palantir.com if you want to go there right now. But at 10 o'clock, he's going to be live on the show and kind of explain why he even started the merch store, what's the point for it, and why like he even went through the pain of building this initiative. And then we've got to talk about earnings that we had this morning, because the earnings were pretty damn good. We had Walmart earnings, we had Alibaba earnings, and you can't ask for a better day to do earnings than a day where the macro data is pretty damn good. And it's what the market wanted. So we got a lot to talk about, a lot to get into. Thank you, everybody, for being here. Thank you for everyone who watched the video yesterday. I got a lot of awesome comments on it. Quarantine Quartet. It was a long video. It wasn't as long as the voice note I sent to my friend, but it was a long video about the media's relationship with Palantir. I said at the end, if you watched the comment voice note, and a lot of people commented voice note. So thank you so much to the people who watched that video. Hopefully it was a good one, kind of dissecting the future of media and Palantir. All right, so macro. Let's get into it, dude. Let's get into it. We got some really good data, the biggest data of the morning, which is why we are starting to see some momentum in the pre-market when we look at stocks, is U.S. initial jobless claims. Boom. Second day in a row where we have seen, second week in a row where we've seen the U.S. initial jobless claims come in lower than expected. So the market wanted 236. We came in at 227. I think last week the market wanted 235. We came in at 227. What does that mean? Well, it means that less people are losing their jobs from an initial jobless claims perspective. And it doesn't mean people aren't losing their jobs. It just means less people are losing it than the street expected, which means the unemployment rate is not dramatically increasing. And so the August 5th data, or the data right before August 5th, indicated to us that unemployment was going through the roof. And that's why the market was collapsing, because if people are losing their jobs, well, people are losing their jobs, they're not going to be able to spend. If they're not able to spend, obviously they're not going to be able to, companies are not going to be able to put up their numbers. That doesn't seem like that's the case in this report. In this report, it seems like jobs are, the pace of hiring is slowing down, but we're not firing dramatically. It's really hard to imagine that would be the argument, and that's why the street is reacting to that right now. On top of that, we got retail sales data. So one of the biggest things we've been talking about on this show is the consumer. And is the consumer screwed right now? Are they kind of in a tough situation? What's going on with the consumer? Well, retail sales came in at 1% month over month. The street thought it would be 0.4%. Last month, it was flat. Last month in June, it was flat compared to May. This month for July, it is 1% above what we had in June, indicating people are buying, people are spending, people are actually consuming products. So this whole narrative that the consumer is weak, like, you can believe it to an extent, but when you see retail sales up 1%, that is a clear indication that the consumer still is spending. Those magic two words that Geoff writes in the chat, soft landing, maybe that's the case, dude. Maybe that truly is the case, because at least that's what it seems like is happening right now with this data. Again, low inflation. Yesterday we got a 2.9 handle. I don't want to ignore that. I know, things move super quick and we forget about it. We had a 2.9 handle. The first time we had, or a 2 handle. The first time we had a 2 handle in over 2 years. And then today we're getting retail sales data that's great. And we are getting unemployment data that is also very, very good. Now, what does that mean for the stock market? Well, it means the stock market is up. S&P 500 is at 549 in the pre-markets. It's up 1%. Again, it's not easy to move an index 1%. You're up 1%. We're at almost 550. Palantir, $31.54 after closing at $31 yesterday. Robinhood, $19.37. Robinhood had July metrics yesterday. Those July metrics were pretty strong, 20% increase across the board, added 70,000 accounts. Deutsche Bank upgraded them today. I'll talk about that in a bit, but I woke up this morning and I saw Deutsche Bank said, hey, we said $21. Actually, this sucker's worth $24, and here's why. And we'll go through their thesis, but essentially their thesis is the organic growth is just incredible. Very similar to what Bank of America said, what other firms are saying. So the analyst community is really getting on board with Robinhood, and they're just seeing the potential. Robinhood right here at 1938. Fortinet is up 1%. Ulta Beauty is up 11%. We'll talk about Buffett and Bill Ackman and Stanley Druckenmiller and everything they bought, but that's up 11% because Buffett bought in. Let's go to McDonald's is up 0.13%. NVIDIA is up 1.1% at 119. Let's go to the Mag 7 in general. Then we'll check Bitcoin. Meta is up 1%. Microsoft's up 1%. Apple's up 1%. Amazon's up almost 3%. Amazon, it's hard to even move this 1% per day. So that's incredible. Google recovering from pretty much everything it lost yesterday on that whole DOJ antitrust stuff. NVIDIA up 1%, and then Tesla up 1.4%. So the street really likes these numbers. The street is giving a lot of momentum to equities. And the street's probably getting ready to get money out of money market funds. We'll get a money market fund update later today for the market close and put some money to work in the equity markets because it is becoming obvious that the Fed is going to cut rates if inflation is coming down and we are not stopping growth, which is very, very important for the broader markets. So it's not bad, dude. It is not bad at all. It is absolutely not bad. Yash Jack says if Palantir goes to $40 by December 2024, it would be crazy for analysts who would be pissed off. Tips Rank is still forecasting a $9 USD as its lowest. Yeah, look, Palantir now has the momentum. Palantir has the momentum. And because Palantir has the momentum, it is just going to be very difficult, I think, for it to go below 20. I think could it get back to like 23, 24, 25? Yeah, that's very possible. Like anything can happen. I just think now the dip, I mean, dude, you got people thinking now the dip is 29.50, which is crazy, bro. Like, because 29.50 theoretically is down 7-8% from here. Like, that's usually when, when stock's down 8-9%, you buy the dip. It's crazy for people to buy the dip at 29.50, but that's how things have changed. We have started to normalize the Palantir at $30. I still look at it every day and I'm just like, wow, dude. Like it's really maintaining in the 30s. And also one theory I had about this, I posted about this yesterday. I think part of the reason Palantir is running up is because maybe the street knows they're going to get into the S&P 500. We're going to know September 6th. Put that on your calendar. September 6th, I will be live for the market close, and we will find out at 5 p.m., or I think it's like 5:15 p.m. exactly, if Palantir gets into the S&P 500. Because you tend to have a run. Tesla had, I think, a 40% run before they got into the S&P, and then they got sold off. But I mean, dude, if the market thinks, hey, Palantir is getting into the S&P, they're probably going to increase some exposure. So maybe that's the reason after earnings we're getting even more of a bump because analysts are projecting, and that's why I didn't think we were going to get into the S&P in June, because there's some signs, right, where you can tell it's going to happen, and there was no signs in June. The stock was flat, so maybe this run up is contingent upon that, which is very, very important. Did you see Renaissance Technology loaded up on Robinhood? They did the same with Palantir before the run. I did not see that. So I did not see Renaissance Technologies 13F. So let's transition into that now. 13F, 13G season is out. For those that don't know what that means every 45 days, the big hedge funds, institutional investors, they have to disclose what they're doing. And so we get to see what they're doing 45 days later. Maybe they made changes from what they already announced in their filings, but we do get some information. I didn't go through Renaissance Technologies, but I'll go through them. I know Palantir is a top 3 position for them. They have about 45 million shares. So I'll check how many shares of Robinhood they had. But it makes sense if they decided to go along both of those names. Brandon says, glad your show is interesting because my job ain't. Thank you for being here. Thank you everybody for being here. Hopefully you guys are having a good day. And we still have a lot to talk about. At 10 a.m., we will have a Palantir employee, Eliano, join the show. And he'll walk us through why he started this merch store and what his vision is for it. And the merch store, the new one, is officially live at store.palantir.com. This is a preview of it real quick. It's really cool. Really, really cool stuff. I'm going to order one of these shirts, and it's just awesome. Awesome, awesome stuff. So he'll be live at 10 a.m. to talk more about it. Okay, so let's get into what the hell these big tech guys are doing. What are they doing? It's all sold out already. Yeah, I had a feeling, dude. I had a feeling it would be sold out. I had a feeling it was some items might definitely be sold out because this morning, as soon as it went live, it was hard to contain it. A lot of people started buying this stuff. Okay, so yeah, hedge fund guys. So yesterday on the market close, and then we'll talk about Walmart earnings after this because Walmart earnings were incredible. Yesterday on the market close, I was, Robinhood was supposed to be the star of the show. We were going to look at all of their July numbers, and instead, this guy took away the attention. Warren frickin' Buffett decides that he's going to buy Ulta Beauty. I did not understand what the heck was going on. I really was confused. I know it's a small position in the fund. Maybe Warren Buffett specifically didn't buy it. Maybe one of his minions at Berkshire bought it. It's a $250 million position. So it's a small position relative to their fund, but $266 million is a vote of confidence by Buffett and Berkshire. And if this is a company they actually want to go long on, the financials do look, pretty reasonable. 2 times price to sales, price to earnings at 12, growth is decent. You might actually see them develop this into a position. Now, as I saw this yesterday, which was the big news that Buffett made, also he sold out of Snowflake. So he's done with Snowflake. He decided like he's not going to partake in that anymore. He added another, I think, 10 million shares to Sirius XM radio, which I think is just going to be an acquisition play. I don't think there's any real long-term vision there. But his big buy was in Ulta. Now, I also found out that there is something called the lipstick index. I did not know this was a thing. Apparently, this is a big deal. The lipstick index is when we have an economic drawdown. Women, as you can see right here in the chart, they tend to buy makeup during economic distress because it substitutes for things like dresses and shoes and purses that are more expensive. Now, a bunch of women in the market close yesterday, they said this is a real thing. And it was very hard for me to reconcile this or understand this because I was like, why would women spend money on lipstick when shit hits the fan? But apparently it's a real thing. It's a very real thing. Estee Lauder, that like a beauty fashion brand person came up with this theory. And so that's a thing. So one of the arguments that you may be thinking about in the context of the Ulta buy is that it might be a defensive play. If Buffett's raising $277 billion of cash, right, which he has right now, and he thinks that a recession maybe is on the horizon in 2025, then Ulta should accelerate versus not doing well. And Ulta's down 32% year to date. So he's not buying it at the top. He's definitely buying it on a discount if you believe that the long-term growth potential is strong for Ulta Beauty. And maybe he thinks that it will be defensive against times of economic distress. Maybe that doesn't mean a full-on recession, but that does mean like if the consumer slows down, this is a bet that this particular type of demographic of consumer won't slow down. So that was what happened with Buffett. And then Ackman sold off a ton of Google and he buys Nike. And it's just like we got Steve on the phone yesterday at the market close. I asked him, what do you think about this? And he was like, I get it, but I don't like it. And I think that's kind of the same thing here. I asked on Twitter what theory people had. My theory was China is going to recover. Lululemon and On sneakers, which most people think are competition, don't have the same pricing power over time with Nike. And that's because of Nike's iconic brand will survive short-term headwinds. The consumer will still pick Nike over the long term. Or it's a trade on the Olympics, and the Olympics will provide momentum, which makes it a trade around the Olympics, right? And he like gets out of it, or he's already out of it by the time we find out. Because he's not going to actually go long on it. He's going to get 10, 15% and then just move on. But I was very shocked that he actually sold Google to make this happen. I mean, this is not something that I thought he was legit going to do, but here's the document right here. So reduced 8% of his Google stake, reduced 19.5% of his other Google stake because he has 2 versions of Google. And then he bought Brookfield. That makes sense to me. I mean, that's fair. Reduced Chipotle by 22%, reduced Hilton by 2%. And then he bought 3 million shares of Nike. So it's a $230 million stake. It'll be interesting if he adds more to it, but if Nike is a recovery play and he thinks that Nike is going to gain momentum, then maybe that's what he ends up doing in the context of Nike. You guys are making fun of me because I said I messed up Estee Lauder's name. I don't care. Okay. You know what? I thought of something last night. I had to go camera to camera. I thought of something last night. It was 12:30 a.m. I was walking and I was thinking about today's show because this is what I do. I think about different things before the show. I realized I am going to normalize the emitism that is a hay in the needle stack. And you know why? You know why? What is a needle in a haystack, right? What is the point of it? A needle in the haystack is trying to find something that is like tough to find, right? Wait, no, is that the opposite? Hold on. Needle in a haystack meaning, is it easy to find? A needle is something that is, something that is almost impossible to find because it is hidden among so many other things, okay? So if a needle in a haystack is already impossible to find, right? If that's the logic, a hay in a needle stack must be like literally impossible. Like it must be 10,000 times harder to find. So theoretically, and hear me out on this before you dismiss these, because I was up at 12:30. I was like legit walking around my kitchen thinking about this shit, dude. I was like, if a needle in the haystack is hard to find, well, a hay in the needle stack must be like, could you imagine trying to go through a stack of needles to find a hay? It's painful to find. So I genuinely believe that this term can become something that's normalized. And I'm going to use it to mean something that's like important. Basically, that's what I'm going to use it as. So whenever you hear me say a hay in the needle sack, it means something that's important. And I think because this is an emitism, I think all the other isms in the world, racism, sexism, ageism, ableism, all the other isms, those can be solved theoretically by an emitism, because an emitism brings everyone together. And those other isms just divide everybody. So I think if we all come together, we put away our biases and our prejudices, and we understand what a hay in the needle stack means, I think we can solve a lot of the problems that we have around the world. And so, yeah, I think a hay in the needle stack is, every time I say it, I'm really fighting a lot of the societal, socioeconomic, and geopolitical issues, and I'm making a pretty meaningful point. That's more meaningful than needle in a haystack, because obviously trying to find a hay in the needle stack is also very difficult. So that's what I wanted to say. Robinhood, $19.40. Palantir up 1.54%, $31.48. Nvidia up 1% on the day. And then the QQQ up 1.28% on amid tardism. Dude, you can't lie. Like it's not a bad point. Like a hay in the needle stack is harder to find, and theoretically it's bringing everyone together. If we can all agree on it, then it's fighting. Like all the other isms are just like dividing people. This ism, I thought that was pretty smart last night. It came to me. I wasn't high or anything. I was just walking around the kitchen at 12:30, and I was like, emitism, solving racism, solving sexism. I'm down for it. Let's do it. Bill Gates. Speaking of another Bill outside of Bill Ackman, he sold 4% of his Microsoft, and he added 42% to his Berkshire Hathaway. This one was very interesting to me because we are starting to see. So now let me get into the bearish section of all the data that I saw yesterday. I mean, a lot of the data was relatively bullish this morning. We had good macro data. If you're just joining, we had really good jobs data. What we did see that was really upsetting, in my opinion, is all of these big tech dudes sell off a lot of big tech. So you see right here, Bill Gates is going long Berkshire. He's going long ketchup, and he's going not short, but he's reducing his exposure to AI via Microsoft. And then Druckenmiller, who I respect profoundly, I'm sure you guys do, look at what he did with big tech. Apple went from 115,000 shares to 24,000 shares. Nvidia went from 1.76 million shares to 210,000 shares. And then Microsoft went to 1.1 million to 400,000 shares. So you saw Druckenmiller sell like a lot of shares. Just like absolutely a lot of shares in the context of big tech. He bought Wolf. I still don't understand why the hell he bought a Bitcoin miner. Some people were trying to explain the thesis to me. I need to talk to someone who's much more smarter than me on that. I have no idea why he did that. Adobe, I guess it's like an AI play, but it's not like a big tech AI play. So that's why he bought that. And then Mercado Libre makes sense to me. He wants to go long Latin America. He also has a ton of stuff in Argentina. So that one makes sense to me. But he's getting rid of Apple, Nvidia, and Microsoft like by 70 to 80%. And then to top it all off, Ron Barron sold 1.7 million shares of Tesla, which is a decent amount of Tesla shares. So you've got Microsoft's Bill Gates selling off some of his Microsoft. You've got Stanley Druckenmiller reducing his exposure to tech. You've got Warren Buffett getting rid of 50% of his Apple. And then you've got Ron Barron reducing it by 1.7 million shares. Again, the data is 45 days late, so maybe they bought back some of that stock on the August 5th decline. I think that's very possible. However, they did trim pretty significantly. So one of the bear cases that I think we do have to discuss is that, and I hate discussing it because I know, there's momentum, but a lot of the big guys are selling out of tech. And I do think it's just important to to like realize that like if you're buying tech, the big guys disagree with you. So you're being a bit contrarian there. And Ron Barron selling 1.7 million shares of Tesla is very surprising to me because he loves Tesla. He thinks Tesla is going to the moon. Obviously, big supporter of Tesla. He's up like I think like what 4,000% on the position. So it makes sense why he's taking profits. But he came on CNBC like 2 months ago and said this thing's going to the moon, and then it did. It was at 130, and then it went to 270. So that's probably, if I would guess, where he began trimming some of the position when he got to that 270 level because he finally got some liquidity to exit at a much higher price. But that was surprising to me. I didn't expect him to sell. So we did see some broader selling, and then you got insider selling, right? And then you have insider selling. Bezos selling Amazon. So to sum it up, Bezos has been selling a crap ton of Amazon. Zucks and Jensen have been selling, but I mean, those are still relatively small sells compared to their stake. Bezos is a little bit larger of a stake, given he only owns 9% of Amazon. Stanley Druckenmiller saying, yes, he sold Palantir at $8. I get it. He's not perfect. He's made mistakes in the past, but he does think he got like a good part of the AI wave on NVIDIA. And so now he's reducing exposure there. And then Buffett sold 50% of Apple. And then Ackman, we didn't talk about him. He sold 28% of Google. So Ackman selling Google, Druckenmiller selling Microsoft, NVIDIA, Apple, Bill Gates is selling Microsoft, and then Warren Buffett is selling Apple, and then Ron Barron is selling Tesla. So I think it's just important to remember, if you're buying large cap tech, which I don't think is a horrible deal, you are going against some of the larger folks. And still, again, those people, they just must have such big positions. They want to reduce exposure. Someone like Druckenmiller reduced exposure by a lot, 80, 90%. So it's just something to keep in mind from the big tech filings. S&P 500 still up 1% in the pre-markets. QQQ up 1.28%. And honestly, them selling large cap tech might not be a bearish sign that the economy is going to collapse. It might just be that they're diversifying, dude. It might just be that they're just like, they're going to Mercado Libre because they see more upside in the next year on Mercado Libre than they do in NVIDIA or Microsoft. So I'm not saying it's bearish for the broader economy. I'm saying it might be like short-term bearish or just stagnant for large cap tech, because large cap tech has obviously run so much that we're looking for a run in the broader economy. Now, in terms of IWM and small caps, they're up 2.2%, which is nice. I don't know if Stanley Druckenmiller sold his $664 million position on IWM. He had a call position. Someone commented on Twitter yesterday that if it's not disclosed and it's a call option via a 13F, that means it's sold. So if I still don't know if that logic is true. If anyone knows for sure in the chat, then please let me know. But if you don't disclose a call option position on your 13F filing, that means I guess you sold it. And if that's the case, then Druckenmiller is out of the small cap trade and he's gone. So if that's the case, then I guess he probably took his profits there and he left and he went to other parts of the market. This was before the current drawdown. That's correct. So this was last quarter. This was not on August 5th, which means they got the tippy top. Or at least they got close to the top. Maybe they bought in on August 5th, right? Maybe they bought in. But he did end up selling a decent amount there. Yeah, it's not 28%. It's not 28%. I did the math wrong there. It's like 14%. He sold off 19.5% of Google in one part of his Google shares and then 8.5% in the other part of his Google shares. But the point is, he is starting to decrease Google at a much more dramatic pace. I mean, Ackman too, dude. He was adding Google at $95. Ackman's been long Google for almost 2 years now. And when Ackman goes long, he tends to go long for a while. Now we're starting to see maybe that's not the case. Like Chipotle went long for 10 years. Hilton, I think, has been 7 years. Canadian Pacific has been, I think, 8 years. Netflix was like 5 months. And Google, now that he started trimming Google, is like 2 years. I don't think he's getting rid of the position, but he did reduce it by a decent amount. So we are starting to see Ackman maybe get into a little bit less of this kind of long-term mentality and more 2-3 year cycles to get his money and get out. And that might be kind of the argument that he's going for as well. All right, Alibaba and Walmart. Let's see what they have. Does Barron Funds have rebalancing rules? They do, but I don't think 1.7 million shares is rebalancing. Yeah, like if he was rebalancing, it would be like maybe a couple 100,000. 1.7 million. He owns 6 million shares, if I'm not wrong. So that is like I'll get the exact stat on that, but it's a decent amount. It's a decent amount of, it's a 9.88% decrease in Tesla. So he owns, so it's a little bit more than 12 million shares. So he selling 1.7 million shares basically is a 10% decrease in his position, which is not crazy. He's owned it for like since 2014, almost, more than 10 years. But I guess he was waiting for a run, and the run to 270, maybe that was the run where he decided to sell. Okay, Walmart. Walmart did great. Walmart stock right now in the pre-market, for those that were betting on Walmart having a good earnings, $74. It's up 8%. This is a $500 billion company. They don't run 8% in a day, but today they're running. Why? Adjusted EPS beat by 2 cents. Revenue beat by about $1 billion. It's up 5% year over year. Adjusted EPS came in slightly lower than guidance, but that's okay. Net sales growth 3.75 to 4.75% for the full year. Q3 guidance, they missed on EPS expectations, but it's by a couple cents. Doesn't seem like it's that big of a deal. And sales growth missed by about 1%. CEO, we see among our members and customers that they remain choice, discerning, value-seeking, focusing on things like essentials rather than discretionary items. Importantly, we don't see any additional fraying of consumer health. That last sentence is why the market, along with the jobs data, if you're just joining, is very, very happy right now. When Walmart says, hey, if Walmart was seeing consumer issues, we have problems, because Walmart cannot see consumer issues because that's where consumers are supposed to go when shit hits the fan. So the fact that Walmart is saying, actually, no, consumers are coming back to us and we're doing all right, that's a very important thing. And that means that the consumers are starting to still, be cost conscious, but they're not completely eliminating their spend. Net sales, $115 billion. That's up 4% year over year. Comparable sales, 4.2%. Operating income, $6.86 billion. That's up 8% year over year. Those are amazing numbers for a company like Walmart. E-commerce sales up 22%. Look at this. Advertising sales online. Has anyone ever bought anything from Walmart.com? Let me know in the chat. I'm sure someone in the chat has bought some. I don't even remember the last time I went to Walmart.com and bought something, but that's up 30% year over year. Gross margin increased by 51 bips, which is great. For Walmart, again, their margins aren't phenomenal, so any increase in the margin for them and Amazon's retail business is good. And look at that, inventory declined by 2.6%. That's great for inflation. That's great. So they don't have a backlog, or they're not having that much of a backlog as they had back in 2022. So we are just seeing a ton of momentum. Global e-commerce sales up 21%, advertising business up 26%, inventory down 2%. You're just seeing a lot more momentum. Here's what the CEO said. Each part of our business is growing. Store and club sales are up. E-commerce is compounding as we layer on pickup and even faster growth in delivery as our speed improves. Our newer businesses like marketplace, advertising, and membership are also contributing, diversifying our profits and reinforcing the resilience of our business model. You just can't ask for a better report from Walmart. So very, very, very strong in the context of Walmart, and overall really good. Benny says, does the jobless claims decreasing mean less chances of a rate cut? No. So if we were having like unbelievable jobless claims, by the way, a lot of you in the chat said that you shop on Walmart. So, all right. So we do see some people actually use Walmart. If the market was expecting 230,000 jobs and we had like 20,000 people say that they lost their job, then we're not getting a rate cut, because then way too many people have their job, right? Or like at least that's what the Fed's perception would be. This was a miss by about 8,000, 10,000, which is good. It's not amazing. It's not like a miss of 20,000 where the economy's too hot. It's like that Goldilocks zone. It's a sweet, sweet spot where the Fed's like, all right, so unemployment is not going up dramatically, but it's also not deteriorating dramatically. And the labor market's not getting hotter. It's not like, we're adding jobs, but we're not adding like 500,000 jobs a month like we were doing in 2021. So if we cut rates and inflation's at 2.9, the odds of inflation reaccelerating, which would decrease the rates of rate cuts based on this report, doesn't seem to be relevant. Meaning good news is good news, bad news is bad news. It's not the inverse relationship that we've had for the past 2 years. So I think a rate cut is still on the table, still very likely. And this jobs report was just good data for the fact that the markets and the broader economy is not deteriorating. Also, all this weakness talk by the consumer that these companies have been laying out there, whether it's real or not, that actually matters. Because if the market's like, okay, so Disney's saying the consumer's weak, which means if people lose their jobs, then we're going to sell off the market because they're definitely not going to be able to like go to Disney if they're losing their jobs. If the jobs data comes out and says, actually, no, people are really not losing their jobs at the same rate that you thought they were, then it becomes a question of, oh, so the consumer might be weak, but we have a hedge against the consumer going to deteriorate because we have obviously people keeping their jobs. Or the other opposite is you just don't believe Disney anymore. You just believe Disney's full of shit and they raise prices and now they're using this whole consumer narrative to walk back a bad earnings. But you don't blame the broader market is the point. Whereas before August 5th, when we got the numbers on August, I think 3rd, the jobless data early this month, that's where the entire market took a hit because like the only person left to blame was equities, and equities got sold off. This is really good jobs data. Really, really good jobs data, and it seems like the street likes it. S&P is at 543. Robinhood, 3.97% on the day. Palantir up 1.39% as well on the day. 25 bips cut on the table, 50 bips off the table. Yeah, I would agree with Kris right there. So 50 bips seems like it's probably off the table for September. 25 bips seems like it's on the table. Okay, Robinhood. Let's talk about why Robinhood is up right now. So July metrics were incredible. Stock really didn't react yesterday after hours, and I think a lot of the news, honestly, I think a lot of the market was waiting for this jobless data, because if the jobless data was bad, then you've got a deteriorating economy, like you got people that are scared. So market really didn't care too much yesterday, along with the fact that we had all this Ulta news yesterday. But I mean, just incredible numbers, dude. Look at this options contract chart. Look at this shit, bro. 131 million contracts in June to 160 in July. And management is saying that August is off to the same start. I don't know if it'll be another 160 million quarter of options contracts, but it is pretty incredible, some of the growth they had right here. Equities was up 104 billion. Crypto was up 20%, 5 billion. Margin book is at 5.4. This went from 4.1 to 5.4 in about 3 months. Cash sweep 21.8 billion. Assets under custody 144 billion. They added 70,000 new accounts, and then net deposits another $4 billion month for net deposits. So overall, very, very, very strong results. And then you got a Deutsche Bank upgrade. You guys know I love saying the word Deutsche Bank. That's my favorite bank to pronounce. Deutsche Bank says, hey, we're raising our price target from $21 to $24. TJ is helping these numbers. TJ is absolutely helping those numbers. So here's what Deutsche Bank says. We view Robinhood's growth potential as being exceptionally attractive, with the founders and management team not only pioneering simple broker trading, but also positioning the company to leverage its creative app, related services, and substantial network of customers into multiple digital financial service arenas. We see long-term earnings growth potential supported by a solid growth in transaction revenue and good cost control across a more diversified business base. While we believe we are conservative in modeling our crypto transaction revenue estimates, we also see future revenue being less dependent on this revenue source, assuming good continued core customer growth and the usage of equities, options, and general investing, along with related cash and lending products. We also view Hood as making an encouraging progress with a wide range of growth initiatives to bolster customer growth, including its highly valuable gold subscriptions, 24-hour stock trading, retirement account capabilities with matches, international expansion via its UK brokerage business, and crypto trading in Europe, along with many other new product service initiatives. We see an attractive risk to return profile for the stock, hence our buy rating. So, I mean, you just got a lot of the banks saying, hey, this is a pretty good risk to reward. The ability to get in at these levels we haven't had in a long time. The growth is exceptional. Therefore, it makes sense for Robinhood at this point. And so that's what you got. Palantir at 31.44 right now. We're going to see how Palantir can hold this $31 range. If we can continue holding it, again, we have really good macro data this morning. If you're just joining, with the jobless claims coming lower than expected, and U.S. retail sales coming higher than expected at 1%. And not just Palantir, really the broader market. I mean, we're up in the pre-market right now. The broader market needs to really condense this. Now is a day where I want to see Meet Kevin get into the market. I want to see Dan Niles get into the market. The sort of bears of the finance community that have some influence that have been saying, we're waiting for a bottom. Meet Kevin sold a crap ton of tech yesterday, and he bought mortgage companies. So that's kind of his play for the rate cut. So he's not kind of going long tech. He's going the mortgage company route, which might be the right route. I mean, we're seeing a lot of the hedge fund guys sell off their tech, but I want to see when they say, actually, no, 507 was the bottom and we're getting in because we're going to miss the rally. Because a lot of people are still skeptical that this is a real rally. They think it's a dead cat bounce, and any piece of bad data, any unwinding of the Japanese trade further might delegitimize this run. And so I'm curious to see when a lot more people buy in. Maybe that ends up happening today as well. Let's get an update on that initial jobless claim data, and then we'll keep going from there.
Studies. Kitty Richards, senior fellow at Groundwork Collaborative, and our own Steve Leisman. And Steve, what jumps out to you here?
Mike, I don't often do this, but I am going to quote myself from earlier this week saying rumors of the consumer's demise were premature. We had our CNBC NRF retail monitor showing some strength. A lot of things have now pointing to the idea that the July jobs number that spooked everybody about growth was maybe an outlier in terms of how much weakness there was. Obviously, we'll see what happens. But this number here, it shows strength. Maybe one of the things leading to the strength was some catch up to the auto sales that were down in June, but came back in July. I don't see a whole lot of weakness here. Some in clothing, some in sporting goods. That's about it. But really, this is a story that says the consumer is relatively strong, and we don't have underlying weakness in the jobs market. Just because the idea is shifting that we're focusing less on inflation and more on growth doesn't mean the growth story is all that weak. I'll leave it there, Mike.
No, I guess certainly not. We were clenched up for something worse, and we've been hearing from companies anecdotally about July being weak, and there's been an uptrend in the unemployment rate. So I guess that all built to some concern here. Kitty, I guess I'd ask for your response to these firmer numbers, because you, I think, were believing that maybe the Fed should have cut rates in July and looks behind the curve. Does this make you reassess it all?
I'm really glad to see that the American consumer hasn't pulled back yet. But I think it's really important to zoom out and say, what is the Fed trying to do? We're supposed to be getting to a place of normal interest rates for the long run and battling inflation. It's great news if we have managed to bring down inflation as supply chains have eased over the course of the pandemic without seeing a bottoming out in the labor market or in retail sales. The Fed should not wait for that bottoming out to happen in order to bring interest rates back to a normal level. And the fact is, what we've seen is month after month of falling and stabilizing inflation. And, it's really important to pull back the curtain. We got CPI data earlier this week, and what we saw was not only continued cooling in inflation, but yet again, about 90% of the inflation that we did see was in the housing market. And the Fed's high interest rates are actually making housing directly more expensive. So this doesn't make me reevaluate what the Fed should be doing, because the Fed should be looking at the actual data, comparing it to what they thought was going to happen, and assessing whether high interest rates are necessary or even counterproductive at this point. And I think it's quite clear that they are. And we shouldn't take some good news in retail sales and unemployment claims and assume that there's no softening in the labor market. There's been a significant uptick in unemployment, and perhaps that does not indicate that we're about to enter a deeper problem in the labor market, but it's a real risk. And at this point, the Fed's high interest rates are really doing more harm than good. And that's been true for several months. So I continue to think that the Fed should have cut in July. They should be cutting aggressively the next time they meet in order to make up for being behind the curve. And I'll remind everyone that 2 years ago, the Fed actually raised interest rates at 75 basis points a pop, month after month after month. And I'd like to see some symmetry in their approach here.
Michael.
I agree with her, man. I agree with her a lot. Essentially, she's making the argument that, look, at the end of the day, the labor market is starting to weaken, even if the consumer is strong. Again, going to that sort of Goldilocks scenario, that soft landing scenario, which is that the Fed can't justify a strong retail sales argument or a strong Walmart earnings and say we're not going to cut rates because of the fear of the reacceleration of earnings. So the Fed cannot use the good data we got today to get a little too aggressive in their higher for longer hawkish desires, because we still see the labor market is losing 227,000 jobs a week, right? So which is, people are still filing for unemployment. So if that's the case, you can't be that aggressive by thinking inflation could reaccelerate, but you also can't be that bullish and think, okay, we're going to cut by 1%. So 25 or 50, it's like, that's a sweet spot. And now the Fed just has to kind of do what the market is expecting them to do, which is not be stubborn, not get this wrong. They've already, you could argue, got it wrong dramatically by not cutting in July, and begin to cut. So I think the data we got this morning is not confirming anything to the downside or upside. It's just keeping things in line. It's what we needed to see. We definitely didn't need to see a hot jobless claims number, and we definitely didn't need to see a very, very hot retail sales number or a very, very cold retail sales number. We got what we needed. And as a result of that, I think the broader market will start to seriously price in a rate cut. So it is exciting. It is super, super exciting. And we're going to see how this plays out. Player one says the world could be burning down, but listening to him, it will make you want to grab some marshmallows and make some s'mores. I think this is one of the nicest compliments I've ever received in my life. And that's because, the market open is it is a hay in the needle stack. And it's one of those things that hopefully provides value to a lot of people in their lives. NVIDIA up almost 1% at 119. Robinhood up 4%, 1940 on the day. Ulta Beauty again up 14%. Warren Buffett is going long makeup. Could not believe this last night, but I had plenty of women in the chat educate me that the lipstick index by Estee Lauder is a real thing. And so there you go. That's up 14%. Last time I bought makeup again, I bought like Fenty Beauty for my girlfriend back in like 2019-ish. And so I haven't really bought makeup in a minute, dude. I think I bought it for my sister again, like 2020 for Christmas or 2021. But I Sephora, Ulta, like I'm just not in that world. But apparently that world is like very big to women, even during a recession. So you got that up 14%. Nike right now in the pre-markets, that's up another 5%. So that's still off the Ackman buy. Where's Starbucks? Is Starbucks up or down? Wow, Starbucks is up. Wow. If you got some puts on Starbucks, they haven't been printing. They have not been printing, dude. Starbucks went down a little bit yesterday, but now it's right back. And again, if this consumer data is really good, then probably Starbucks catches a little bit of a bid, because if this CEO dude can turn it around. By the way, you know how much they gave the CEO? They gave this dude $85 million to come to Starbucks. And it's a hell of a deal. $85 million and the stock goes up by 20 billion in market cap. Hell of a deal. Hell of a deal. Amit, have you never worn makeup? The last time I wore makeup, I was at AIPCon, and they did my makeup before I went live on the halftime show. So I felt like so special. This lady, this makeup artist, she was like, she was apparently there's a word in makeup called foundation. She was foundationalizing my face, and I was so confused when she said this is foundation. I was like, foundation? What are you talking like? Foundation to me is like when I think of the foundation, because I use that word a lot. I was like, so this is a foundational element of our business. Or like, she's like, oh, we have to put foundation. I was like, what the fuck is foundation, dude? What is this? What are these words that women come up with for makeup? Foundation? Are you trying to sound more important than it is? Like, what is this stuff? So last time I got makeup, I got I was foundationally getting foundated with foundation during AIPCon. But other than that, I have not used makeup in a while. So foundation makes you less shiny. Okay. Well, I guess that's why I need a foundation, especially if you're going on camera. But yeah, the lipstick index is a thing. So I think Starbucks will maybe catch a little bit of a bid. Market open in about 1 minute. We'll see how this plays out. But consumer stocks that were struggling maybe aren't struggling too much. Bitcoin, 59,169. Bitcoin has really not been able to gain too much momentum. Maybe the rate cut is what unlocks the liquidity that's necessary for the capital markets to gain more leverage on Bitcoin. But as of now, it's not there. By the way, MicroStrategy, it's up 2%. There's going to be a MicroStrategy 1.75 leveraged ETF coming out soon. So if you thought MicroStrategy was leveraged against Bitcoin, you're going to get even more opportunity to get leverage against Bitcoin. So these single stock ETFs are becoming more popular. But I guess we'll see in general how that plays out. If Bitcoin catches a bid, that's probably going to do well, along with a variety of the other Bitcoin stocks as well. S&P 500 at 1%. Let's put all eyes on Palantir as we get into the open in 20 seconds. 31.39. Incredible stuff, maintaining this $30 range. Market is really seeing Palantir as a leader. I think it's going to open up at close to or maybe even a little bit above a $70 billion market cap. And we will see how Palantir continues to gain momentum. Here we go. 9:30, August 15th. Thank you, everybody, for being here. The stock market is now open. Wake your asses up. Let's get into it. All right. Palantir, a little bit of a red candle there, 31.09, up 0.32% on the day, but we do have some sell side pressure as soon as we get into it. Robinhood, 1926, a little bit of sell off from 1940 down to 1924, but in the 19s right now, which is good for Robinhood. Nvidia is getting a red candle right there. Nvidia is getting sold off at the top at 118. S&P 500 up 1.14%. S&P is 15 cents away from hitting. Oh no, there it is. $550. There you go. $550. Not bad at all for the S&P 500. Walmart's up 7%. IWM up 2.3%. Small caps finally catching a bid. Nvidia just went red. Starbucks just went red, but it's basically flat. Nvidia is down about 20 cents. Robinhood 1920. Fortinet's up 0.74%. Ulta's up 12%. TeraWulf is up 8.96% after Stanley Druckenmiller bought 2 million shares of TeraWolf. Cisco is up 8.7%. Google is up 0.54%. Netflix up 1.54%. Disney up 1.32%. Google again up a little bit. Nubank up 1.42, almost at $14. And now Tesla, 207. There you go. Even though Ron Barron sold about 1.7 million shares of Tesla, Tesla at $207 is not bad, up 2.85%. I do think we will see a little bit of a sell-off today because, I mean, the market pumped in the pre-markets. People are going to take their profits. However, that sell-off is less relevant to me. What matters more is, do the dip buyers come in, and the people that are out of the market, do they come in and they decide to take a dabble in because they believe that the jobs data, the retail data is enough to think that a recession's not going to happen. Amazon up 2.8% at 174. Amazon was at 150. So if you got Amazon, congrats, because Amazon is definitely getting some momentum. Sean says, would you rather buy ELF after this sell-off as a hedge to the market? ELF still had a great earnings, just missed the last earnings, just missed a little. If we have a recession, it can mark up the stock price. I don't know enough about ELF. Apparently, if the lipstick index is a real thing, ELF, by the way, up 6%, then ELF should accelerate if we have a recession. So theoretically, ELF could be a defensive like Ulta. The thing about ELF, though, is that they're a different type of makeup company. They're a much smaller makeup company, and they have a different go-to-market. So I don't know if they're as defensive as Ulta. Like, I think there's a reason Buffett chose Ulta over ELF. But I do think, like, yeah, ELF is growing phenomenally. They took a bit of a tumble. They were at 230. Now they're at 150. You just have to see if that future growth sustains itself, because the future growth is declining, even though it's still growing 50%. But at one point, they were growing like 400%, right? So ELF, you can't grow at 400% forever. So you just have to think, is the market going to be okay if they grow at 30% instead of 50% next year? And will that be decent for the broader share price of ELF? But that one's catching a bid right here, up 4% after Buffett bought Ulta. Palantir going a bit red, $30.97. So holding 30 is like the main thing to me that's just very exciting. 31, now we just got back to 31, is like just a cherry on top in terms of the street getting so excited to buy these shares that they're willing to pay $30 a share. So holding 30 is awesome. Getting to 31 is pretty exciting. Google at 160, Disney's up 1.32%. Sweet Green is up 2%. PayPal up 1.9. PayPal's $3 away from 70. We haven't seen that in a long time. SMCI at 578. DoorDash at 127. Alibaba, Michael Burry bought another, I think 20,000 shares of Alibaba. Alibaba's at $80 as it opens. Not really moving too much. It's up about 1%. But you got Alibaba gaining a little bit of momentum as well. My girlfriend and mother use ELF, said it's a great product at a great price. Yeah, a lot of women tend to like ELF. I've definitely heard that on the chat as well. And I guess, a lot of women in general, they buy makeup, and it doesn't seem like the makeup industry is necessarily slowing down. I'm just concerned. I'm curious. Is there anything more to Ulta that we don't know about that Buffett sees, right? Is it not just the lipstick index? Is it not just it's down 30%? Is there something else that's in Ulta that's really catching his eye, or at least Berkshire's eye? And I want to do some DD over the weekend and see if there's anything really interesting there. Google at 162. Snowflake is sold out by Buffett. So Snowflake really not getting that much love. It's basically, the market decided after Buffett sold that they're not that happy with Snowflake. They have earnings the same day as NVIDIA, so we'll see if they can reaccelerate growth. Again, Snowflake going down the Arctic LLM route. I kind of think it's pointless, but that is their positioning in AI, or at least their way of selling AI. So we will see if that continues to get the market to be excited. Where's Palantir? Palantir, are we still holding 31? We are just barely holding 31. Let me see the resistance on Palantir's book volume and see what's stopping it. It's kind of teetering on this 30.99 level. Yeah, there's really no resistance for Palantir. If we get the volume, we should crack 31 throughout the day. 31.50, there's 30,000 shares. I think we hit 31.50 yesterday at some point. It's pretty good price action. The top yesterday, what was it? The top yesterday was 31.57. So, the top yesterday was 31. Yeah, 31.30-ish. So we hit 31.57 in the pre-markets. 31.10 right now. Let's just see if we can keep maintaining that. Walmart up 7.5%. Mercado Libre, again, Druckenmiller took a stake in them. They're up a little bit. Robinhood now up 4%, 19.41. And Ginkgo Bioworks is up 2% on the day. Lyft, someone added a crap ton of Lyft. I'm forgetting the name of the manager, but he added like 9 million shares of Lyft. So you got some people taking an outsized position in Lyft as well. TQQQ, by the way, up 3.96%, getting some more leverage as well. Crossroads says, I know Snowflake and Palantir really aren't competitors. I'm just a little happy because every time Snowflake goes down, well, look, yeah, Snowflake and Palantir really aren't competitors, but the problem is retail investors had to deal with this debate. It's like we were fighting Wall Street in 2022 when they were buying. Dude, in 2022, when Palantir was 6, Snowflake was 150. Now Palantir is 30 and Snowflake is 125. Like just a complete 180 from what was happening. And Wall Street really made retail feel like they were dumb for buying Palantir and not buying the stock that Warren Buffett was in. The amount of headlines I saw about Warren Buffett and Snowflake. But no, he got it wrong. He got it wrong. He should not have invested in the IPO on Snowflake. He got it wrong. And tech is not really his strong suit. So I guess someone gave him the recommendation and he just took it. But he would have made a lot more money buying even Palantir at DPO. He would have been up, from $10 to $30. So Snowflake was just wrong across the board. We'll see what they can do. I do think they're a little oversold, but I think now the long-term thesis is it's deteriorating quick. And the fact that they had that data breach, the CEO is not inspiring. I mean, there's really nothing to get excited for when it comes to Snowflake. And it doesn't look like they're becoming a massive AI leader either, right? So until they really prove that, it's going to be tough to see what happens with Snowflake. Snowflake getting killed by the war with Databricks. Yeah, that's another thing. So Databricks, I saw something last night, dude. I saw this article came out about Databricks and Snowflake. Both of them are like fighting for different acquisitions, which is crazy, dude. Databricks and Snowflake are fighting to acquire companies, whereas Palantir is just like innovating internally and doing their own thing. I think Databricks is going to be the top of the market. I think it's going to be the top of the market. This is the post for the Databricks thing. Right here. So Snowflake was looking for acquisitions. One startup, Tabular, seemed a potentially great asset to help the software company catch up in AI, and Snowflake entered into negotiations to buy for $600 million. Then Databricks popped in and paid $2 billion for Tabular. And Snowflake was pissed off because they can't pay $2 billion as a public company for a startup. Databricks is still private, so they don't have to deal with public investors. By the way, Palantir back to 31.31. Incredible price action on Palantir. Incredible price action by Palantir. Dipped right below 31, now at 31.28. That price tag was unheard of for a valuation of a startup only doing $1 million in revenue. The startup was doing $1 million in revenue. Databricks bought it for $2 billion. This is why I think when Databricks IPOs, it will be the top of the market. You raise your cash, you don't sell your Palantir, but you get out of some other positions and you sit back. If Databricks can convince retail that it's time to buy because they're the AI whatever, we have an issue, dude. And if retail buys into that, if the hedge funds buy into that, then that means we have an issue. Look at this. In 2021, Databricks raised $1.6 billion at a $38 billion valuation. There is no way they're not going to try to go public at least at $60 billion, if not closer to $80 billion, because they need to give their investors a return from the Series H funding round. And they're not going to take a down round if they're growing 60% year over year. That's the one good thing about Databricks. They're growing very fast. So I think when they go public, I'm not saying it's a horrible stock to buy. I'm just saying there's going to be so much liquidity because they can only go public if there's liquidity. There's no way they go public without it. So that's why, it's a little tough to see the Databricks Snowflake comparison in the context of what Palantir is doing. Tesla, where is Tesla? Tesla is up 209. Wow. Tesla up 4%. Cybertruck, by the way, was announced as one of the best-selling vehicles of the year, selling already 100,000 units this morning. So Cybertruck doing well. By the way, I've been seeing a lot of Cybertrucks in my neighborhood and around New Jersey. Like I saw 3 of them, dude. 3 of them yesterday, just driving around New Jersey. I was shocked. I like now Cybertruck is becoming normal. Like I went to the gym, I parked at the gym. I parked near a Cybertruck. And so I was like, I think they're starting to become more popular. And in New Jersey, there's a lot of Teslas. Like you guys think Teslas in California. In New Jersey, there's a lot of Teslas. And it makes sense that we're seeing a lot more Cybertrucks here. So cars definitely gaining momentum and popularity. I still think it looks cool. A lot of people think it looks ugly. It definitely, makes you look at it, which is important. And it seems like that one is definitely picking up steam. Tesla right here at 210 right now. Where is NVIDIA? NVIDIA is up $200 billion over the past 3 days. NVIDIA 119. There you go. So NVIDIA is trying to get back to 120, 2.93 trillion market cap there. Palantir 3113. Robinhood 1950. Not bad. Robinhood up 4.58% on the day, 1950 on Robinhood. CrowdStrike 260. Oh, CrowdStrike is also doing great. Up 1.8%. They got upgraded by a ton of firms yesterday, and most of those firms just said, hey, we like CrowdStrike, and we don't think the disaster is going to affect their growth that much. So CrowdStrike, it bottomed at 198, I think, on CrowdStrike. Now at 260 if you got the dip right there. Palantir at 3110. In about 20 minutes, guys, Eliano from Palantir, who's an employee at the company, he's going to be joining me on the stream. and he's going to be talking about why they built the merch store, which is going to be super exciting. The merch store is out, store.palantir.com. I don't know if things are sold out, but that is the link, store.palantir.com. And they already unveiled a ton of different stuff. So he'll be on in 20 minutes and he'll talk to me about the logic behind that merch store. Celsius right here. Wow, Celsius up 5%. Dude, if Celsius is up 5%, the market is excited because the market has hated Celsius for a while. They've absolutely hated Celsius for a while. Not bad. Rivian, where's Rivian? Rivian's up 1%. Where's Lucid? Lucid is up 4% on the day. Let's look at the SaaS names this morning. So SaaS, left-hand side of my screen, everything's green except Twilio and Snowflake. Everything else is green. Salesforce is up. MongoDB, ServiceNow, CrowdStrike, etc. Those are the ones that are not up. And then for semis, wow, look at that. Look at that across the board. Everything's up. AMD, TSM, Qualcomm, Dell, Micron, Dell, 90 to 106. TSM, 140 to 170. Intel is even up 2% on the day. SMCI, 485 to 585 today. So been a nice swing there. And then NVIDIA right here at 119, trying to get to 120. Not bad. Not bad at all. Cybertruck looks like it was designed by Homer Simpson. Dude, the Cybertruck is an exact embodiment of the term hay in the needle stack. The Cybertruck is an exact embodiment of the term hay in the needle stack. So I think I like it. It looks attractive to me. Let's get an update from Dan Ives and what he's thinking about on tech and Google as well. Here we go.
Yeah, look, I no doubt. Look, last week was a huge win for DOJ, and they're gonna now probably ride that momentum. I mean, you have Apple and other big tech players that are caught in different antitrust issues. You know, our view, Nicole, is that it's going to be business model tweaks. We don't think breakups ultimately happen here, but no doubt this is going to start to now be more and more of a focus, I think, for investors. But also it depends, too, you know, in terms of FTC con, which way that goes from an M&A perspective. But it's clearly this battle, Beltway versus big tech, is going to continue to gain steam.
It always feels like a thorn in the side. I mean, it felt like since big tech really started to be a story over the last few years, I just felt like there was one antitrust suit after another. And, you know, you're saying, look, they're going to have to fix this, they're going to have to fix that, but ultimately they're not breaking up these companies. So the companies have so much money. Is it really going to affect the bottom line of these companies? If so,
well, the irony is that if you actually broke up Amazon, Apple, Google, I could argue that the actual sum of the parts is a lot more than the stocks are today. I mean, that's actually the irony. Now, in terms of when you look at what's happening with Google, depending on which way the DOJ goes, clearly Google will appeal this. This will play out for years, you know, in the court system. But I do think this is it is a little more than a thorn in the side, because I think what happened with DOJ last week, getting that win, that monumental win, now this goes back to, I remember covering Microsoft, you know, going back into the late 90s, early 2000s, when they were going through their antitrust battle. And these are a lot of twists and turns ahead. But at the end of the day, we don't think the business model is massively changed. And that's really sort of the headline.
Yeah, and I would agree with Dan there. I mean, the business model is like, you're not going to change what's going on with Google or Amazon in any way or any meaningful way. NVIDIA right here at 118.93. And again, I think the litigation that these tech companies are going to be in with the FTC is just going to be so long. SoFi up 3% on the day, that the tech companies or that the DOJ is not going to want to go through that long of a process. Or if they do go through the process, it's going to take years. Meta's at 532, by the way. Netflix at 669. DraftKings up 5%. Nike up 4%. Square's up 3%. Roku's up 2%. So I think Dan Ives is right. I don't think we're going to get to buy YouTube individually as a stock or Google Cloud. If we had to pick between the two, I would pick YouTube, though. And I do think that the money that these guys have is going to be able to get them through a lot of the pain that the DOJ is trying to put them through. Palantir 31.18. Look at Palantir holding on to 31 like a freaking champ, dude. Really holding on 31 incredibly well. And then Robinhood as well, 1950. I mean, Palantir and Robinhood both really doing their thing. and not doing too bad. 31 price action on 31 is absolutely incredible. Again, people are buying it at 30 and 31. They are continuing every time you buy it at those levels, or someone in the market does, they are agreeing that Palantir is worth this much, which is just so important for people that have been in there for a while, because you need that normalization of the stock at a different level. And the number of days we're above 30, maybe the longer we get to have a sustained growth above 30, so that we don't see the 20s again, right? Like when you're in a new price discovery level for a stock, you don't want to see it a retrace. And you want to see, there'll be pullbacks here and there, but we're not out of the 30s by any sense of the imagination yet. It's only been a couple of days, but the longer we stay here, the less time we're in the 20s, which is really, really important as well. Institutions are buying Palantir. Maybe that's why. Maybe that's why is helping the price action. Woody Trades, thank you for the $5 super chat. Just bought all the merch. Amit saw a comment on yesterday's video. Love the idea. Can you create a Palantir intro video? Something to send new investors. Chad and I are working on this. Chad and I are working on making a ontology video where I just get to interview him about like the most basic elements of Palantir. Because when he sat with me a couple of months before AIPCon to really break down some of the stuff to me, it made more sense. So we're going to work on that video and hopefully get it out in a couple of weeks. And yeah, I think that'll be a good video for people to get the basics of Palantir. And see, here's the thing. I made a video yesterday about the media coverage on Palantir. If you guys haven't watched that, I think it's a pretty good video talking about media and Palantir. More and more people are going to be curious what the hell Palantir does, because they're going to be hearing its name more and more. And that just means more and more people are going to go to it, look at it at $30, be like, oh, this is the next Microsoft. Oh, that'll be like $300 one day. All right, I'm going to take, I'm going to just buy some. They're not going to overthink it, right? A lot of people just don't, a lot of people don't care that much. At the end of the day, a lot of buying is just like based on emotions and based on gut instinct. And as long as they hear the name more and more, they're going to care more about it. So I think that itself is a logical way you see Palantir start to gain more momentum, 31.30 right now, and start to get new buyers enter into the stock as people learn about Palantir. $70 billion market cap for Palantir, $70.2 billion. Is it expensive? Yes. Is it overvalued? I don't know. I mean, expensive is one thing, egregiously overvalued. I would say that the growth is accelerating, which means that the PE is going to come down and down and down every single quarter as the growth keeps going up. So yes, it's the most expensive name in software. I don't know if it's the most overvalued name in software, just given the potential growth trajectory. Now, if they don't grow, then if they go back to 20% growth, of course, right? But if they get to 30% and above, I think we will continue to see more momentum. Amit, your glass half empty. The longer Palantir is in the 30s, the longer it will take to get to the 40s. Yes, that is also true, Lee. That is also true. Yes, Palantir's PEG ratio is 3.24. If you know PEG ratios above 2 is like pushing it. So yeah, it's like I'm not saying it's not expensive, dude. I'm not saying it's not expensive. I'm just saying people are buying it. Robinhood right here at 1961, up 5% of the day, and the reason they're buying it is because they see future growth, right? And so that future growth is why people are justifying it. Robinhood 1961, pretty incredible day, up 5%. Again, they got upgraded by Deutsche Bank, so that's why Robinhood is up right now. Tesla up 5.8%. Where is Tesla? Tesla we've got in. Wow, 212 on Tesla. See, here's the thing. When we get a rate cut, it's more likely that people can finance a Tesla, right? So I'm curious if Tesla catches a major bid on the rate cut. I know a lot of people are thinking, well, regional banks will do well, mortgage companies will do well. What about Tesla and Enphase? What about just basic companies that should get more demand when rates come down? Enphase is up 2%. Now, I know rates are not coming down so dramatically to the point where Tesla should go to the moon or anything, but still, if you're pricing in future growth, that should help, right? Nate said they will just raise the price of cars. That's one thing. Yeah, they might just raise the price of cars, and that could offset some of the additional volumes. I mean, right now they're doing like basically 0% APR, which is increasing the volumes because, they had to get people to buy this stuff. But the broader growth story is obviously FSD, and Elon's 10/10 event is going to be, where we see what the trajectory of the company really is going to be. Amid the rate cut narrative doesn't apply to Tesla. They've been offering crazy low interest in order to drive demand. Yeah, that's fair. That is fair. So I guess the street now is just excited then that the macro is getting better. And now we're prepping for that 10/10 event. Dude, if Tesla runs back to 270, let's look at the chart right here. Before the 10/10 event, I mean, it's a crazy chart, dude. Like this year, if you've been a majority portfolio Tesla investor, it has to be one of the craziest years ever. You go from 250 to 138. Look at this. In the beginning of the year, you were at 265, go down to 138, 45% drawdown. Then you make your way back up to 199. Then you just struggle until Elon gets paid. This is the time where Elon was, we're waiting to see if Elon gets paid. Then he gets paid. Then you bounce up to 271. Then Japanese carry yen trade unwinds, broader tech sell-off happens, and more importantly, Elon delays the robo-taxi event, and you fall back to 181. Now you're at 212. Oh, it's been a hell of a year for Tesla investors, and if it makes its way back into that 250 range before 1010 or after 1010, that would be pretty damn exciting. Palantir at 3140. Where is Rocket Lab? Rocket Lab 537. That's up 3.7%. That's amazing. Meta is hitting close to all-time highs right now. Meta's at 532. Meta's all-time high was 544. So it's getting close to there. And again, Meta fell to 440 on August 5th and now at 532. Meta also just incredible earnings that they had last quarter. Palantir right here at 3134, and then Robinhood at 1959 on the day. Not bad, dude. Not bad at all. PayPal. Is PayPal up? Wow. PayPal. Even PayPal's catching a bid. 67.34. There you go. SoFi getting a little bit of love. SoFi's up 2.65%. 679. Yeah. So SoFi needs to get back over $7. I don't know when that's going to happen, but so here, let me say something about SoFi. DDI made a good post on Twitter. I'm curious what you guys think about this. All right. And it even made me question some of the things I've said about SoFi. So let me lay this out. What do you guys think about this thesis? SoFi's worth $7 billion, but they're growing like a SaaS company. But the argument on SoFi is, oh, well, you have to value them as price to tangible book value, right? Which means technically at 680, SoFi's overvalued if you look at price to tangible book value, regardless of the growth. Nubank is at $65 billion in market cap. They are absolutely not being valued on price to tangible book, and they have bank in their name. They're literally a new bank. And SoFi's, fighting the narrative that they're not a bank. So does that make sense to give Nubank a crazy multiple? And Nubank has the growth to justify it. But does that make sense? Why is Nubank worth $65 billion and SoFi's worth $7 billion? But SoFi is growing, not like a Bank of America type of stock, but more like a tech stock. I actually scratched my head on that one. And I'm curious if anyone has an answer. Like, it really made me scratch my head because that's true, right? Like, if you value Nubank on price to tangible book, there's no way you can say Nubank's worth $65 billion, even though they're growing at like 75% or whatever. So I don't know. I don't have an answer to that. The only answer I have is that people just don't like SoFi then. That's the answer. And so I guess that's the issue. Arnie says Nubank is a tech company accepting that it is a bank. SoFi pretends not to be a bank and lies. So Nubank is an actual tech company saying that they're a bank. SoFi doesn't want to be a bank, even though they are a bank. That's the reason. Maybe. Palantir right here, 3128. Look at Robinhood, 1962. Look at that, up 5.2%. This is, this is partly jobs data. This is partly their July data. This is also partly Vlad doing 17,000 different interviews. We just watched an interview yesterday, a full podcast with him last night on the market close. He's getting out there. He's getting the message out about Robinhood, and the analyst community is reacting very positively with their price targets because they're seeing the momentum that Robinhood's putting up. So Robinhood getting some great momentum. NVIDIA is almost at 120, 7 cents away from 120. It's up 1.56%. ARM, wow, ARM's up 4%. So ARM fell basically from 200 down to, let's look at their chart. They fell from 189 down to 94, and now they're at 131. What a crazy last month, dude. Not even last month. It was 2 weeks ago when this happened. What a crazy 2 weeks. Absolutely insane. And Robinhood has 40% year-over-year growth numbers. Yeah, that's correct. I mean, dude, Robinhood has grown 40% for 2 quarters in a row. And I'm doing my modeling for Q3. If they can grow another quarter 40%, I think so the street's expecting 650 million, which is basically like 39% growth. So the street basically is expecting 40% growth. If they somehow put up a third quarter of 40% growth, I mean, dude, it's going to get pretty insane. That's going to be 3 quarters in a row growing 40%. So that is definitely going to get very exciting for the company and for the broader street as well. Palantir at 31.39, Celsius up 4%, Snowflake 127, NVIDIA 119. Basically, oh, there you go, 120 on NVIDIA. 120. Who bought the dip on NVIDIA? Put it in the chat. Who actually bought the dip? And when I mean the dip, I mean 105 and below. 105 and below. That's how you gain your badge of honor on the dip buying for NVIDIA. 105 and below. Who bought it 105 and below? Let's see. I did not. I did not. Honestly, my main dip buying was Robinhood. So I think on August 5th, a lot of people are strapped for cash because a lot of people were all in the markets like myself. So you had to find cash from somewhere. I didn't have a ton of cash, but whatever cash I had, I was like, all right, let's do this. So if you had a boatload of cash, dude, and you went shopping, congrats. But you had to probably make some choices. And so you had to, if you bought NVIDIA, you had to really believe that NVIDIA was the dip to buy that day. And so if you bought, then congrats, because it was a hell of a dip and it's up almost 30% since then. All right, we got a bunch of you bought. Not bad. 20 shares at 95. Look at that. Steven, like a champ. Captain Planet 97 to 102. Incredible. Bought it at 93. Bought it at 95. Not bad. Where's Palantir? Palantir 31.37. Just incredible price action, dude. Just incredible. Almost at its 52-week high. About 20 cents away from 52-week high at 31.50. Let me check how many shares are waiting. Robinhood at 1970. At 31.50, there's 35,000 shares. If we get through 35,000 shares, we're hitting 31.50. Robinhood right here, 1970 up 5.66%. Let me check the resistance for Robinhood at $20. 20 would be very important psychologically for Robinhood in the markets as well. Dude, there's only 6,000 shares. There's 21,000 in 1975, so we got to get through that. But there's a shot to get through 20, dude. There's a real shot. There's a shot. Let's see. I mean, if we get through 1975, we should. If we have the volume, we should get to 20. There's not a ton of resistance holding it back from getting to those levels, and the momentum's there. Palantir at 31.35 right now. In 3 minutes, guys, we're gonna have someone join the show who's a Palantir employee. So if you're just joining, you're just in time. And he's going to walk us through why he relaunched the Palantir merch store, which is officially live. This is the link, store.palantir.com. I didn't even get to buy my shirt yet. I want to buy this shirt right here. I've been busy all morning, so I'm going to buy it after it's done. Hopefully it's not sold out. If it is, then I'm just going to put in the order and wait. But new stuff is already there. Some people are saying it's sold out. Maybe it's just like, maybe certain products are sold out. I don't think the whole store is sold out. But the good thing is they can restock it really easily because, I mean, from what I understand, Eliano's ordering in bulk. So if he needs to order another 1,000 shirts to sell out, then it should be ready to go pretty soon. You know what's funny? You know, Meet Kevin bought 1,000 calls for Robinhood at $20, expiring tomorrow. If he still kept them, he might actually make some money on those, dude. I mean, I'm sure those calls are up now because I think he bought them at when the stock was 18 or not. Maybe he bought them at this range. I don't know when he bought them, but it was a degen play, but tomorrow they expire and maybe Robinhood sees 20. Maybe he actually makes money on that if he didn't sell out of that. So maybe that ends up going good for Meet Kevin. Scott's has just bought 60 shares of CLSK to build out to 300 shares. CLSK Clean Spark, 1145, up 4% of the day. Yeah, that one is up. It did get oversold. Bitcoin's getting some momentum. If you listen to Jason, who's part of our Technical Tuesday crew on the market close, he's not a big fan of the Bitcoin miners at all. He doesn't like any Bitcoin proxies, really. NVIDIA, look at that, might go to 121. But I do think if Bitcoin goes up, Clean Spark probably gains some momentum. The delaying of earnings was very weird. I don't know why they did that. But outside of that, Bitcoin goes up, Clean Spark should be okay. Okay, cool. Not too bad. Seems like a lot of you got NVIDIA in that 100 range. So congrats, because that's amazing. Kris says, I bought 5 shares of NVIDIA, but when it was thinking it was going to 80 and would buy another 50, but then it went up. Well, you're not alone, dude. A lot of people on August 5th. I mean, dude, I'm assuming a lot of people bought, but they didn't buy as much because they were scared, right? Because like the world was melting down. The fucking Japan was going to collapse. Dude, Japan, like, we lived through Japan facing a 1987 level crash on a random Wednesday. That happened 2 weeks ago. And so like the VIX was at 65. Like I don't blame anyone for feeling that the world was crashing because the world felt like it was crashing. It's just that it lasted for like 5 minutes. And then you just were in no man's land of purgatory, just not knowing, is the crash real? Is this like, really? That's it? It's like, all right, well, I guess I'll buy the dip. And so it was tough to buy it, but it did get pretty intense. Palantir right here at 31.32, up 1% on the day. Robinhood at 1970. Celsius up 4.94%. Snowflake at 127. SoFi 683. Meta at 534. And then where's the S&P right now? S&P is at 550. Look at that, up 1.17% for the S&P. And the NASDAQ 471, up 1.88% on the day. Not bad. Not bad at all. All right, folks. If you are here, thank you all for being here on the Market Open. I have a very special guest who's about to join. He has been on the show a couple times via audio, but today he's going to be joining via video. Just to give a little introduction of this guy, this is someone who is the only reason I got to meet Dr. Alex Karp. He took a chance on me back in March and reached out to Arnie and I and said, hey, we're hosting this, or we're sponsoring this conference in DC. And we want you and Arnie to be there just to take some pictures and hang out. And me and Arnie were like, this is going to be really fucking cool. So we started a relationship with him, and we didn't know at that conference he would end up getting us to meet someone that Arnie and I have been waiting to meet for a very long time, which is Dr. Alex Karp. So he has been really pioneering the retail investing community about Palantir. There's obviously a big base of us, and there's been a big base of us for the past 4 years. A lot of us bought this sucker when it was $6, and we were supporting it when Wall Street wasn't supporting it. And this year, basically, Palantir realized, hey, we should really leverage this retail community. And this guy, along with Chad, are the two biggest reasons, in my opinion, for why the retail community has been as engaged as they've ever been. And one of the ways to engage people is to get them to rock some fire merch. Ladies and gentlemen, Eliano, thank you for being here.
I appreciate the intro. That was great.
How are you doing, bro? This is a big day for you. We got the merch store launch. I'm excited for you to be here. And it's just an exciting time to be covering Palantir.
That's great. I'm doing a lot better now because I woke up this morning, site goes live, I'm feeling great. And then all of a sudden, people are blowing me up in the DMs. They're like, oh, the shipping's not going through. It won't give me shipping options. And so obviously, I freaked out. There's a lot of pressure when you work for a software company. And then these things go wrong. They're like, oh, they can't even handle the back end of the store, blah, blah. I mean, the truth is, yes, it is our responsibility. It is my responsibility, but it's handled by an outside vendor. They're in California. Thankfully, they were up at 5 a.m. to make sure everything went well. So they fixed the problem. But if anyone has any issues, just hit me up and I'll take care of it.
This is really, really exciting to cover the company. It's a really, really special moment. I've been covering the company for the past couple of years, and now in 2024, I've received some institutional support from the company in terms of you and Chad really caring about the retail community. And one of the ways you guys are doing that is by launching store.palantir.com. So the first and obvious question to get this started off is, we used to have a store in 2021, then it kind of went away. What is the logic and philosophy of bringing the store back?
Yeah, so it's funny enough. So I started working at Palantir in January of 2022. The store but I bought it from the store in 2021. So basically, I think what happened was they put the store as they were going public as sort of like to raise awareness for the IPO. And then they had the store, but the products were made in China. There wasn't really much thought into sort of like the greater community. And so they eventually took the store down because it became sort of like a cost center and it really wasn't doing well. No one was really paying attention to it. So it kind of fell apart. So then, following SCSP, I had a conversation with leadership, and, they were really happy with sort of the fact that you were there and that you met Dr. Karp and Arnie, and they really saw that we had this community, but there was really no way of cultivating and engaging the community. So I was sort of tasked to do this. And I asked for one thing. I didn't ask for anything except for just, I wanted the store back. And they were like, sure, go ahead and do it. I was like, all right, great. So I went around, I figured out who had what, like who was responsible for this. And I brought the store back because I knew, like, you have to kind of like think through your own lens oftentimes. But I remember back to my experience when I was just a retail investor before I was even part of the company, what it meant to be able to buy a Palantir hat. And like, let's just take a step back. It's like, why do people buy Palantir hats? Like, why did we sell 1,000 hats in 3-4 weeks? Like, there's no other software company in the world that I'm tracking that could do that. And the reason why is like, think about this show, think about your platform, Amit. Like, why do you cover Palantir? Like, why do people care so much about Palantir? It's not just a stock. And I think that's what a lot of people, they just see a squiggly line that goes up and down and whatever, and they see a stock price and they think of an investment. But you and I have talked a lot about this. Like, Palantir stands for a set of values. It's a mission. It's meritocracy. It's pro-West. It's that, this is a company that's led by Dr. Karp that doesn't do what other people, it doesn't conform to other people. And that's when people put a Palantir hat on, they are aligning with those values. They are being part of that community. And that is what I felt when I bought a Palantir hat back in 2021. And the truth is, and that hat was basically the first domino to fall that led me to getting a job at Palantir. So that's why the merch store means a lot to me. That's why I'm very grateful, and I have a tremendous amount of gratitude for being able to do this, because it really hits close to home.
It's so special. You were a retail investor that cared about Palantir before you got a job at Palantir. It's kind of like a fairy tale, dude. Like, you love this company and then they offer you a job and you're there. So it makes sense that as soon as they asked, how do you think we can keep engaging the community after the AI Expo, your first instinct was the merch store.
Yeah. I mean, selfishly, I tell you what, man, I think the people at my gym probably think I'm some sort of degenerate, because I literally wear Palantir merch every single time I'm in that gym. Yeah. Like, I wear Palantir. I think I've worn Palantir merch 15 straight days to the office. Like, I'm wearing it now. This is the hat that's coming out in phase 3. This cup is coming out in phase 3. You've got your gear. It's just like, I'm really proud to wear it. And so I know how people feel putting on Palantir merch. And so we wanted to give that to them to energize the community. And also just like give people the opportunity to start organic conversations. Like, hey, what's that company you're wearing? Or what's that logo? And then people can talk more about it. And that way we can sort of market Palantir organically.
Right. This is really, really exciting. So let me ask you this question about the merch store. Palantir got a deal with Wendy's last week to power their supply chain. And you had this post on Twitter that said, hey, if you wear your Palantir hat and you take a picture with a Wendy's Frosty, you can get a voucher to the store, right? Something to just engage the community. And there were like 50 to 100 people that posted pictures and selfies of them at Wendy's. What does that mean to you when people are willing to actually go to a restaurant and take a picture with their hat? And how does that embody what you think the ideals are ultimately of the community?
I mean, it's special. Again, it kind of goes to the point I made earlier. There really aren't many software companies, and there certainly aren't a lot of companies out there that can kind of convene and mobilize people like this for fun. I just think people are really proud to be affiliated with Palantir. It's just a strong brand. And I think for us as a company, software that works, like employees that truly want to own the outcomes of their clients, right? It's like really smart people. It's a leadership that doesn't, again, conform to ideals. And so people will do things like that because they want to be associated with such a strong brand. And we are proud to associate with those people. And so when people go to Wendy's, like that to me was like super cool. My favorite one was like Cindy posting a picture in front of Wendy's. Like you and I, we both love that. Like, and I know she tunes into your show.
Yeah.
But again, like I get messages, people like, oh, it's a red flag that a software company is selling merchandise. And I'm like, dude, you don't get it. I was like, I'm not going to name other software companies, but we're not like other software companies. We don't do things the way that other people do it. Oh, you went to a conference and you saw this, and that, and other software companies weren't doing this, and that. We don't care. Like it's like we have a community here of people that are super energized, that are super passionate, that believe in the same values that we do. And we want to engage those people. And we're going to continue to engage them. And we're going to continue to engage them through people like you that, are tremendous content creators that really care about your craft. And we're just super happy I'm personally, as just me, I'm really happy to have developed a friendship with you. And I'm looking forward to seeing you grow for many years to come.
Yeah, and it's so interesting. Palantir grew organically from the bottom up, and they did it their way. And my journey as a content creator, Arnie's journey as a content creator, we did it our way, right? We did it organically. And so I think there's so much mutual sort of synergistic energy between a company that just doesn't care what people think and goes for it, and content creators, because if you're a Palantir content creator and you defended the company when things were rough, you had to have that thick skin and that mentality. Let's address the idea of a thick skin right now in the context of people. I would say it's like 5% out of the majority of people that are saying, look, wearing a stock that you own's hat is cringe, and repping a company is cringe, and it's this weird cultish behavior that is a little bit too toxic. What would you say to the people that say embodying the cult by wearing their merchandise is just a bad thing to do?
I don't care. You know, I mean, like it's like we don't care. Like they don't get it. You know what I mean? It's like
where's that meme that we don't care?
No, my favorite is like the Mike Tomlin video where he's like, "We do not care."
Yeah,
like, it's like, I mean, look, again, like it's hard. You know, I'll tell you what, man. Like I remember one time I was on a date with this woman, and she was like trashing me because I loved my job and like loved my company, and like she was familiar with Palantir and was like calling it a cult, and I was like, you don't get it. And she's like, oh, you know, that's what they all say, blah blah. But truly, like people don't actually get it. Like I think your viewers get it, you get it. Like there's something special about this company. There's something special about
I don't know who the hell Mike Tomlin is.
Mike Tomlin is a coach of the Pittsburgh Steelers. Awesome coach, super cool guy.
Wait. Did the Pittsburgh Steelers ever get arrested for being thieves?
No,
they're Steelers.
No, Mike Tomlin.
They're stealing. So.
Yeah.
This is why he loves me, folks. This is why.
I think it refers to like Pittsburgh, and the Steelers. They made steel.
Oh, they made steel. Oh, I thought they were thieves. I just thought. Okay. So basically, if someone wears a hat, you think it's good to embody that culture. You don't think it's a red flag because that just means those mutual values are aligned.
Well, okay, so people wear Nike. It's like Nike's motto is "Just do it." Right? It's like when you put a Palantir hat. Like everyone has a different story. Like, I mean, let me ask you a question. What got you into Palantir? Like, what was like that moment of like brilliance that you're like, when you first remember hearing about Palantir?
I was on the website. I've told the story a bunch of times. I saw the word ontology. I did debate in high school. I learned ontology was a philosophical term, and I saw this company saying we are making the ontology of your organization. And at that moment, I was like, oh, this is like one of the weirdest terms to use in data science. And then I saw Carp speak. I was with Andrew Ross Sorkin in 2021, and he was like, if you don't like the stock, I don't give a fuck. And I was just attracted. I was like, wow, no one has the balls to say that. You know?
But there's thousands of companies out there that you can invest in. There's thousands of companies that you can follow. There's only a few companies, Palantir being one of them, that has people like you actually following it every day. Yeah. And I think every single person that watches you, everyone has like their Palantir moment where they first heard about Palantir or they first fell in love with it. For many people, it was hearing Dr. Karp speak.
Yeah.
For me, it was 12 years ago at my first job. I heard the term Palantir, and I saw its mission and how it was created to combat the key issues highlighted in the 9/11 Commission report. And for me, being a really patriotic kid that remembers, 9/11 and sort of, the way the country was afterwards, like seeing a company that embraced like software and data to combat like terrorism while protecting civil liberties. And then as I peeled the onion back further and further, and I started seeing clips of Karp, clips of Joe Lonsdale, clips of Peter Thiel, and then I saw, Alex Karp, that was left on the political spectrum, and Peter Thiel, who was right on the political spectrum, but they didn't care.
Right.
The denominator was providing the U.S. and its allies with the best software capabilities. And to me, that was like so fucking cool because like at that time, like the country was super divided going from President Obama to President Trump. Things have gotten super polarizing since then. But when you enter this building, when you enter a Palantir office, all of that, it just disappears. All that matters is solving problems, delivering positive outcomes. So for me, it's like going to your question, it's like, why do people affiliate themselves with this brand? Why do people buy merch? It's because we share a common, it's like we collectively, whether it's employees or investors or whomever, we share common values that we believe are important, and Palantir embodies that. And that to me is really special. And that's why I'm super proud to play somewhat of a role in helping people express that alignment with Palantir's culture. And whether it's a merch store or engaging the community, and we're going to continue to engage the community even more. I just feel really fortunate to be here. So it's super exciting.
It's very exciting, and I think for anyone who says the merch store is cult behavior, it's one of those things where I don't think you get it. And I know people say, well, if you're in the cult, that's what you say. But really, like, there's only one other company in the world, and I think that's Tesla, that can mobilize people to buy Tesla tequila or Tesla merch. Like, you don't get people to just buy merch from a company, because at the end of the day, they're unemotional about it. They're investing. They want to see the stock go up, and then they'll sell and then move on. With Palantir, it's an emotional journey because of Western values, because of Teal, because of CARP, because of what they did after 9/11. It's so much deeper than the stock. It's just retail got really smart getting the stock when it was very low. And so it's a journey where people can make money, but also really care and believe in something.
Yeah.
Tell me about the merch, dude. American made, not from China. What are the aesthetics of these products?
Yeah. So, I've learned so much working on the team. First of all, I have a great team. Like our designer, Philip is just the coolest dude. He's based in London. If there's one person I want to go party with at the company, it's Philip. So Philip's like the designer. Emma does sort of our content, and all the names and everything are like her ideas. And then Abby is sort of like our the engine within the team that helps actually execute between finance and everything. So I just want to shout them out. As far as the products go, the water bottles, as you can see, are made in the USA, simple and clean. What we wanted to do here was just come up with a product line. And we're going to continue to build on this. But we wanted to come out with stuff that was clean, that wasn't too cluttered. The old store was selling like, kind of shirts that would shrink and were kind of tight fitting and were like cheap made. We wanted to get stuff that was like actually really good quality, that embodied the software, right? That like represented the software. And that's why we're like, the shirt, $41 for a shirt, like that's not cheap, but it includes shipping. It's 100% cotton. It's a relaxed fit. It's really good quality. I wear mine like every other week. And the crew neck sweatshirt, same thing, simple, clean look. This is sort of like our foundation essentials, right? We're basically building from the ground up. So the hats were kind of like the foundation, get the store back, get the infrastructure up and going. These are kind of our base layer. And then we're going to continue to add on top of it before we eventually get to like really cool special drops, replica, Titans, stuff like that, potentially. So again, we wanted to go with a simple look, a clean aesthetic, kind of thinking of like athleisure, in the know, not too loud, not like anything that's like kind of cringy. Like, no offense to Under Armour, but like I used to hate how they threw their logo, like protect this house, like all over their shirts and stuff. Yeah. Like, no offense to Under Armour, but like the old Under Armour of old, but like we wanted to go with something that was like clean and like really cool streetwear.
And a lot of people have heard me call you a French model, given your aesthetic. We can see the chest hair already. We got the polo Ralph Lauren, Rolex is on. I mean, like, the glasses hanging in the, like, it's the aesthetic. So has that influenced like your personal desire to be the next Louis Vuitton? Has that influenced this?
Well, first of all, I appreciate you gassing me up always. I don't know if you actually mean it. I hope you do. But I would say like my personal style for sure has influenced like how I view the store. And so I like, if I'm wearing a suit, I'm very much inspired by like Japanese culture, Italian culture, like in terms of that. But like for the streetwear, it's kind of like, again, same thing, like European, not too loud. I'm not a big logo guy, despite, like the subtle Ralph Lauren here that you pointed out. But like, I typically avoid like big, logos on like shirts and stuff like that. And so that's why we wanted to keep it small. Like All Saints, like, that's a company that I really like and based out of London. I think, Shai had mentioned that the shirts look like that as well. But, it's just like, again, when someone has to make the decisions for like the store aesthetic. And so I would be lying if my personal style didn't influence it. So I hope people like the merch. And if they don't, like, we're open to feedback. But at the end of the day, like, there's certain things that we're just not going to sell. Like, I'm not going to sell fitted hats, right? Like, I'm sorry, like, this isn't a California surfboard shop. Like, we're not selling fitted hats with flat brims. I appreciate it, love the support, but we're just not going to do it.
International, can people order across the world?
Yeah. So if you're ordering internationally, it's a $25 additional upcharge, but it's a flat. And if you order multiple items, it's just $25 on top. So if you're ordering international, I recommend that you again, bunch things up. And people complain like, oh, $25 is a lot. I just want to make one thing very clear. We lose money on international orders. We are still covering it. We are picking up some of the costs. The $25 does not cover it. So I understand people's frustrations. In the future, I will see there's opportunities to incorporate some sort of drop shipping capabilities in Europe. But for now, like that's the best that we can do. And we appreciate, the first time we ran the store, 95% of the orders were American, 5%, less than 5%. I think it was maybe 3 or 4% actually were international.
Right.
We ran the hats, 17% of the orders were international. So you could see that globally, Palantir brand has grown substantially. And so, we are going to try our best to take care of our international homies.
Yeah, and I think the international thing, I'm just pulling up my phone real quick because someone commented under one of my videos yesterday, if I can find the exact comment, but he's in Korea, and he said, dude, like Palantir is growing in Korea. I just bought a hat, he said in the comments, and he's like, I see the brand really starting to expand, which is a big deal for him because, it's Palantir doesn't have the biggest presence in Korea, even though they are there, and to see the company that he's been investing in start to really get momentum.
So the three countries that have done, the 3 international countries that have done the best, can you guess them? Just
from
guess.
a word perspective. So I would say international, I would say UK, Canada.
So Canada's one of them.
Okay, so I got Canada. Germany.
Yep.
Germany.
So Canada, Germany.
Don't give me the last one. Don't give me the last one. It has to be South Korea.
It's Korea.
Korea. There you go.
Like, I fucking love Korea. Like I'm trying to convince Uncle Chad to come with me to Korea.
Singapore. Yeah, Singapore has been ordering a ton of them. Yeah.
Singapore. Yeah, Singapore as well. We love Singapore. I think we have growing momentum in Singapore. Where there's a tremendous like tech scene in Singapore there. So I think AIP, and especially even looking at their defense, who knows? But I definitely want to do an Asia swing with Uncle Chad, and maybe we'll bring you with us.
That would be fun. The other thing I was going to say here is that so the high prices as well. One thing that I realized that if you buy a shirt from H&M for like $10, there are people in Bangladesh that are getting paid 10 cents an hour for you to get that shirt. So I do think the high prices, it's just a function of capitalism. At the end of the day, you're going to pay higher for higher quality, but you're also going to know it's made in America and it's valuing and fitting with the brand aesthetic. And so that's why some of these higher prices are justified.
Yeah. So the hat's $35. The hats are made in Bangladesh, right? The hats are made in Bangladesh. We are selling those at cost, and that includes free shipping domestic. So it's not like, I understand like it's a little bit more expensive that you want to pay, but it's not that bad. A t-shirt, right. If you were to buy a t-shirt at the store that you really like for $30, right? That wouldn't be that crazy, but we're charging $41 with free shipping, right? And it's made in America, and it's good quality, and it's a great fit. And
the goal you told me is not to make a profit on any of this. The goal is to break even.
Any money off of this at all. We
are not going to show up in the revenue numbers in Q3.
No. The my only objective is not to get a call from like Uncle Dave and just being like, what's this like $100,000 like loss or something? Like, you know what I mean? I'm just like, so I'm keeping it so far so good. Like so far it's just it's covering the costs, and I'm being as reasonable as possible and trying to charge as little as possible. And I continue to look for ways to through other means to like bring that cost down low. So I pay you for to take off the shirt, honey. Oh wow.
Yo, my chat is different, dude.
Yeah. Well, yeah.
You left him speechless, guys. Good.
I don't know what to say to that, AJ, but.
All right. So Eliano, this is my show, and I heard you wanted to bless my show with a little bit of a giveaway.
Yeah, but the thing is, we were going to do the giveaway, but you already gave away the answer to the question that we were going to ask.
What was the question? I forgot that we were going to ask.
Your nickname for me.
Oh no, but let's see if people listened. All right, you want to do it? Okay, so the way this is going to work, Eliana's going to ask a question.
No. We already asked the question now, and so like now we have to think of a different.
You want to do a different?
I will ask a question.
Okay.
I will ask a question.
So the way this works, guys, he'll ask a question. I'll give you like a minute to think about it. Whoever types it first in the chat, we want to do one $100 voucher or two $50 vouchers.
I will do $100. I will do one $100 voucher to the person who gets this right. And again, I know that there's always like a controversy about who responded first or whatever. It's whoever lands it first on your chat event.
You know what we're going to do? I'm going to actually be on YouTube on my phone, not StreamYard. So I think I'll get the person who lands it first because YouTube's more accurate on my phone. So I think we'll get the right person this time. So whoever types it in first on my phone, I'll have direct evidence. you'll be the winner. So
all right, so I will ask the question. All right, ready?
All right, here we go. Go ahead.
Okay. Where or how do you have to be very precise with this answer.
Hold on, is it a one-word answer? Let's just is it a sentence or
it's a pretty detailed thing, but people should get this.
Okay.
It'll be like 3 words.
Okay.
Which particular college did Dr. Karp attend with Peter Thiel where they met?
Okay, I've got my phone. I'm waiting for it.
Which college / university did Dr. Karp meet Peter Thiel?
Okay, guys, my phone is very accurate, way better than StreamYard.
And it's not just Stanford. It's Stanford something.
Okay. So it's Stanford something, not just Stanford.
They didn't meet at Stanford undergrad. They met at Stanford. There it is.
You got it? Okay, don't say the name. Just tell me the answer, and then I'll find the name.
Stanford Law School.
Okay, so the person who won, this is from YouTube, not a StreamYard, so this is accurate. Stanford Law School. Give me 30 seconds. I don't want to mess this up. Stanford Law School. The winner is, confirming one more time. I should always do this to YouTube. It's so much better. Stanford Law School. The winner is Kim. Kim.
Okay, so okay, here's what we're gonna do. We're gonna do. Okay, so you saw Kim. We'll also do a voucher. I'll do 2 vouchers. So one to Kim and then Joseph Bahego. He's who I saw on my stream.
Okay, cool. There we go.
Joseph Bahego. If you just give me all the.
Yeah. So Joseph Bahego and Kim, DM me on Twitter. I'll give you the Twitter right now. Please DM me today, and you guys won. There you go. There we go. Joseph Bahego and Kim. So again, Joseph Bahego and Kim, Kim, Joseph Bahego. There's my Twitter. Just DM me there, and we'll do it. Stanford Law. That's a good one, dude. I didn't even. I mean, I knew that once you said after Stanford.
They were roommates. They were roommates at Stanford Law. And honestly, I wish I could be like a fly in the room just to hear their conversations back in the day, like about the two of them just debating and talking about the world and technology and all these different things. Like, you know, it would be really cool. My dream one day is to have the two of them sit down and like talk about, you know, Palantir from the beginning. So we'll see. But yeah, thanks for having me on the show, man. And thanks for the support. And I appreciate everyone who reps Palantir. It means a lot, and a lot more to come.
I just got Kim's DM. So Kim, I actually know this person. I know you. You go by a pseudonym of Kim, but I've DM'd with you before, so that's awesome. This guy's a big Palantir fan, so this is great. Okay, one last question for you before you go. Thank you, first of all, for the voucher. Thank you for everything you've done for me. I mean, like, I can't thank you enough. You're the only reason I took Karp. He's the guy who took the picture of Karp messing with my hair. I mean, like, it's just
Karp. Look, I want to make one thing very clear. You told a story on your stream, like when this first happened. When Karp was done with the panel, I was in shock at how he literally just ripped off his microphone, ripped off the cords, didn't say bye to any other panelists, didn't even like say bye to Andrew Ross Sorkin, and just beelined it directly to you. Like basically people were coming at him and he didn't care. He just went straight to you because he knows who you are and he appreciates everything that you've done for the community. And so you have to understand, like, I'm happy to have help connect the dot, but like, you get a lot of credit for all the work that you've done and you deserve it. So I just want to make that very clear.
Yeah, no, I appreciate that. But at the end of the day, like, my mom raised me with the values of gratitude, and I know there's no chance I meet Karp unless you don't go through the hard work of really taking a shot on me and Arnie, dude. Like, we could have been some crazy psycho dudes that come up to this conference and we're like, just like not good public actors, but you took a shot on us. You thought we would be okay given how you saw us engage on social. And you let us meet the guy that we've been covering for years. So it really means a lot. It really, really means a lot.
Yeah.
Go ahead.
No. I was gonna say, what was your last question? You're gonna make me.
I'm gonna make you cry. My last question for you was, you kind of answered already, but I guess just like a final definitive end. What do you think is the future of the community itself in terms of the growth, the adoption, and how the community is going to ultimately grow with the company?
I just, I think it really comes down to like a little, I would say, transparency. Like and like telling stories. Like I want us to get better about telling success stories where, we talk about ontology, we talk about Foundry, we talk about all these technical terms and these big contracts and stuff like that. But what I really want to do is tell more stories about how Palantir created a really positive outcome. And I just basically, like, we've got so many great people at Palantir. I work with some really awesome people, and I want them to tell their stories, and I want the community to be able to get the information so that when they're talking about Palantir, that they can talk about it confidently and tell stories, because stories are more powerful than anything else that we do. And so I think it's about engaging people like you and Arnie and other members of the community and getting you access to more information. And I think also doing some fun stuff, and also like more merch, like really cool merch. Like we're going to take to the next level. I'm talking like, I don't want to spoil it, but like we have some big ideas for what we're going to do here. Yeah. I have people hitting me up about making Palantir scotch, like, more from that, but like down the road eventually. So we're just getting started. Like I'll just leave it at that. I know that's a pretty lame, bland answer, but I just think we're going to do a lot more together. And I look forward to working with you and others. And if people have ideas, like, hit me up on Twitter. I love engaging and talking with the community.
Yeah, everyone, if you are not following Eliano on Twitter yet, please, please, please make sure to follow him on Twitter. Not only will you get the best Palantir memes and content, but you'll be able to, he checks his DMs, he listens to ideas, so you can follow him there. Eliano, thank you for joining, dude.
Dog merch. I saw someone comment on pugs. I love pugs. The love of my life is a little pug named Chloe. She means the world to me, and so I want to deck her out with some Palantir gear. Yeah, can you blow up her picture? Just,
That's so cute, dude.
I mean, she is just gorgeous. I mean, look at that face. I mean, she's a little.
How long have you had her?
So she's the family dog, and my parents live nearby, very close. So I see her, I babysit her a lot, and she stays with me a lot. And she comes to the office a lot. She's very popular here. Her name's Chloe. She's 4.5 years old. She's a little thick girl. And she's just a nice little turkey, so we love her so much. And she loves Palantir.
I love it. Dude, Palantir is lucky to have you. You are doing, I think, in the next 5 years as this company grows, and you're going to be one of the core leaders that's building the public image of Palantir. It is a very big deal. Really excited. I know Karp and the team are really appreciative of what you've done this whole year, and the crazy thing is it's just getting started. So
we're just getting started, babe. I appreciate you, Amit, and I appreciate everybody. And again, Palantir, or Pilly the fucking best, is that they say, I guess.
I love it. Thank you, Eliano. We'll talk to you later.
Have a good day. Bye.
Bye. All right, there you go. Merch store is live, and the stock almost at 52-week highs, 31.43 on Palantir. Robinhood, 1987, up 6.5%. So streets getting excited for Robinhood. There you go, 1987 right there. QQQ up 1.93, S&P 1.22, Palantir 1.3. A really green day, and again, the green day is primarily based off of the momentum in the jobs data. So awesome stuff. Really exciting, dude. Thank you all for being here. We're still going to keep the show going, but just want to give another shout out to Eliano for being here. He has really transformed everything for Palantir in terms of their public perception, especially along with what he's done to engage the retail community. And you guys know, like, having institutional support from the company that gives you a cosign for what you're doing, it means a lot, right? Like when Elon responds to a Tesla creator, that Tesla creator is more incentivized to keep making content because they know they're at least, like, the guy they're talking about actually cares about what they're talking about. So it really means a lot. And I think the entire company has started to mobilize behind giving retail attention, because retail gave them attention when no one gave them attention. And Eliano, Chad, these guys are leading the charge on that. So really, really awesome stuff. The merch store is store.palantir.com. Here's the link in the chat. Store.palantir.com. All right, 3144 Robinhood. Let's freaking go, dude. 1989 on Robinhood. This is kind of the move we were looking at. You know, it's kind of following its historical trajectory. Earnings tends to just be a nothing burger for Robinhood, even when they put up good numbers. And then over time, they start to gain some momentum. Again, the jobs data, if you're just joining, the jobs data is the reason I think Robinhood and a lot of other companies are up, because essentially this morning, Retail sales came in up 1% versus the street expectations. Walmart said the consumer's strong. Jobless claims lower than expected. CPI below 3%. Walmart, again, one of the largest retailers, saying people are continuing to spend. Maybe, just maybe, we get a landing that is landing on a stack of hay versus a stack of needles. Maybe, just maybe. And if we land on that hay versus those needles, it will be a softer landing. If you didn't get it, just spelling it out to make sure everyone understands. But let's see. Let's see if that if that plays out. All right, where's Palantir? 1988 on Robinhood. Palantir 31.49. Let me see that. So 31.50 was the resistance, right? I think we still have resistance at 31.50. Yeah, 41,000 shares. So it's going to be a little bit of a tough one to get over 31.50. We have 40,000 shares. But if we can get up those 40,000 shares, then we'll have some momentum. NVIDIA's 121. Wow. NVIDIA's 121. Did not know that. Look at that, up 2.6%, dude. NVIDIA went through a roller coaster. It was funny. I saw this meme yesterday of everyone when NVIDIA was at 120 thinking that like it was like, all right, I'm going to buy the dip. And then it gets to 100 and the meme's like, I'm not buying that shit. Because it's like, that's how it feels, right? When it dips, you're like, oh, well, NVIDIA is kind of overvalued. Jensen's selling, CapEx, yada. You get every bear argument. And then it comes up and then people start buying on the way up. It's just how it happens, right? If you bought the dip on August 5th on anything, especially the stocks you like really know, you should feel proud of yourself, dude. You should, whether it's Palantir, Robinhood, NVIDIA, whatever it is, because August 5th was tough to buy the dip. But if you bought, you really saw through the noise and you said, screw it. And you decided that these are big opportunities in a bull market with a lot of momentum. So not bad stuff. Let's get an update on what's going on CNBC, and then we'll keep going from there.
The soft landing just got some major support today. Today's retail sales report and the strong commentary on the consumer by Walmart is reinforcing the idea that the consumer may be slowing, but is still very resilient. Here's where the markets are right now. It's 3-1 advancing to declining stocks. That's a strong advance. It's led by banks, consumer discretionary, technology stocks. The only sectors down are defensive sectors, healthcare, real estate, and utilities, modestly in the red. The bottom line, this is a growth tilt chart for sectors. As for the S&P 500, I just mentioned, it's executed a complete round trip from roughly 5,500 to just prior to the jobs report. That was August 1st. 41.86 was the close on August 5th. That was the yen carry trade freak out David was mentioning. Now we're back to roughly 5,500. Complete round trip here. Same with the CBOE volatility index, the VIX, only it's inverse. Complete round trip, same period, 15 to 60 on that day, August 5th, and back to 15. Round trip here. This has all happened while the market sentiment has remained mostly neutral, which may be surprising to you. One investor sentiment gauge, the weekly survey of investors for the American Association of Individual Investors, is largely neutral. During periods of euphoria here, bullish levels, you see here 42%, they typically go into the low 50s when euphoria is high. So reading in the low 40s is well below any kind of euphoria. I'm calling this neutral. Let's look at other measures of the market. The fact that earnings growth estimates are holding up is critical here. Inflation is trending lower. Interest rates are rate cuts are expected. Growth is slowing, no recession. And the S&P 500 earnings growth right now, really critical, 10% for 2024, 15% in 2025. That's very little changed in recent months. True revenue growth is not as strong as we would like, and much of the reason earnings are holding up is just cost cutting. That and the need for more revenues is a big issue, but that is a 2025 issue. So regardless of what's going on right now, look at those, what I just showed you there. Inflation moderating, growth slowing, but no recession apparent, interest rate cuts coming, earnings still holding up, folks. That is the definition of the soft landing.
He's right. He's right. If we get this soft landing, we're all going to make a fuck ton of money this year. Excuse my French, but it's true. And today is one of those days, August 15th. By the way, it's my grandma's birthday. So happy birthday to my grandma. She definitely doesn't watch this, but I definitely have to call her. Also, it's India Independence Day. So she was born on India's Independence Day. August 15th may be one of those days in the summer where it starts to really feel like we're going to get a soft landing. And maybe we get some data in the next couple of days and it reverses that whole thing because this is how the markets are. But at least on today, we can sit back and think, okay, it might be all right. We'll see what happens in September up to the election, but things aren't that bad given the data we got this morning. And now we just have to see if it continues to pull up.
If none of this impresses you and you're still skeptical, here is Walmart CFO John David Rainey telling us this morning on a CNBC interview. In this environment, it's responsible or prudent to be a little bit guarded with the outlook, but we are not projecting a recession. There it is. So what is remarkable to me is the most improbable of things have happened. We were talking about a hard landing in October 2022. Remember the recession that was imminent? We were down 20% at the end of 2022 on the imminent recession that was coming that never came. Then the Fed started aggressively raising rates, and we were a year ago talking about the imminent recession that was coming out of that. And yet, the soft landing through all of this has simply remained, and that has been what has actually been happening. I think it's most improbable of outlooks. It's remarkable to me, but here is the data that supports it. It's in front of our face. I keep waiting for earnings cuts. They don't come. 10% this year, 15% next year. Yes, you can say, oh, there's a lot of cost cutting, but the bottom line is still holding up. I think it's a remarkable story. I think the skeptics people should be skeptical about the whole thing, but it's worked. Soft landing is real.
And we're going to close this recent earnings round with what, 11%?
Yeah, for Q2.
11% growth. Not bad. Not bad at all for the S&P 500 companies.
Q3 is a little bit lower than it was a month ago, but that always happens in the first month of the new quarter because analysts are a little too optimistic and they start cutting in the first month. But it's all within a very, very normal range right now, and eventually it'll come back up for the third quarter numbers. So again, just be amazed that the probability that the Fed would avoid a recession when they had to raise rates in the face of inflation is remarkable. There should have been something.
There were a lot of naysayers.
And rightly so. I was among them. Historically, this is the most improbable of outcomes that we're getting right now. And heaven knows we may still get one down the road. We are going to get one eventually.
You know what they call it in my world? A jackpot.
Yeah. It's a good idea of having a long-term plan if you're an investor and sort of staying put. You know, trying to trade your way or market time your way in the last 2 years would have led to tears for almost everybody.
What's the old saying? Give me a couple good stocks and a good book.
Yep. Yeah. And a beach.
Well, thanks.
I got a few.
Yes. VIX back below 15 this morning. Futures traders raising their odds of a 25 basis point cut in September after that retail sales number today. Joining us with his take on the road ahead, Goldman Sachs chief U.S. economist David Miracle. David, what a treat for us. Good to see you.
Okay, we'll get to that Goldman Sachs guy in a second. But yeah, guys, what do you think? Honestly, what do you think? Give me your raw thoughts in the chat. Let's get some feedback. What do you really think about what that guy said? I thought he summed up the soft landing thesis pretty strongly. Where is his flaw? Where is the red flag in what he's saying? Again, I'm trying to be pretty objective about it. I know it's a green day, but the reason he's being objective, let me summarize it again. Walmart says consumer is strong. Walmart crushes earnings. Walmart is a big, embodiment of the consumer. Jobless claims better than expected, means less people are being unemployed. CPI yesterday below 3%. Retail sales up 1%. I mean, you just have all these revolving pieces of data. And then the Japanese carry-yen trade probably unwound. VIX down, I think, another 2% today. Again, VIX was at 65 2 weeks ago. VIX is currently down 7% today. You just have so much stuff that starts to point you either into a massive bull trap or into a wait a second. No. Things might be okay, especially if Q3 earnings puts up the growth that Q2 earnings put up. So what do you think? Where's the red flag in terms of what he was saying? Where's the issue in terms of his argument? Chris CRM says, I think the market is soft landing and I'm focused on buying great companies at discount prices through the end of 2025. I think that is fair. I think he is right until the AI bubble bursts. And eventually the AI bubble will burst. But again, if you listen to Eric Schmidt yesterday, it might take 5 years, 10 years, given all the money that's going into NVIDIA and training these models. Like maybe it takes 2 years, right? Like I don't think anyone fully knows. Eventually it will happen. But if you're wrong on the timing, meaning you try to time the top and the bottom of the bubble, it's as he said, it's just very difficult to do that. It's really, really difficult to do that. Also, Iran-Israel peace talks is back on the table. So this is a headline. I did not know that. I'm going to Google that real quick. Iran-Israel. I'll just type in Iran-Israel, see what happens. Yeah, you're right. There's some P stocks. You're right. Yeah, there you go. 2 hours ago, new high stakes Gaza ceasefire talks in place to avert Iran-Israel war. 2 hours ago that came out. We don't know if that's going to, lead to anything, but that is an argument. That is absolutely an argument that geopolitically that stuff's calming down as well, which is important. I don't know, dude. I think there's a lot of data this morning that was important. Lot of data this morning that was very, very important. And then again, my big bear case on the broader Q3, because again, I'm not trying to be delusionally bullish. My big bear case is Max 7 ends up spending too much or too little on CapEx. And either way, the street doesn't like it. And we've obviously seen a lot of these big tech guys, Stanley Druckenmiller, Warren Buffett, start selling off their tech, probably at the top in July and June. So either they bought the dip in August, we'll find out in 45 days, or they're a little, a little conservative right now when it comes to tech, and they're broadening out that rally. But even if my bear case around tech, and again, it's just a potential bear case around how the street interprets CapEx, even if that comes true, that just means more money should go to other names besides NVIDIA and Microsoft, which is okay. That's like a good thing. Does it go to small caps? I don't know. But either it just gets pummeled into Microsoft and NVIDIA, which is probably not the healthiest for the rally because you want to see things diversify, but that's still a good bull case. Or Microsoft ends the year at 415, not at 460, which is still up 12, 14% for the year. And then money goes to other names, which is still good for the broader S&P. So I think there's a lot of ways to see how this plays out. And that might help the broader market find momentum. Robinhood at 1990. Oh boy, are we going for 20? Are we going for 20? The momentum's there. Palantir still has at 3150, 44,000 shares that are waiting. So 3150 is where the shares are lying. On Robinhood, there are 12,000 shares at $20. There's really not a lot. So with those 12,000 shares, maybe that can get us into 20. Okay, so this monkeypox thing, I've been hearing about it. I haven't talked about it because I don't think there's enough updates on it. Some people are saying global crisis. Some people are saying it's not real yet. It did happen in 2022, and then it kind of went away. I don't know what's going to happen with that. I mean, that's another black swan that could come out of nowhere. I think that's under control, but I am not educated enough to talk about that. So assuming that we don't have another crazy issue with diseases, maybe we're going to be okay. But yeah, outside of that, a lot of the other macro data really, really looks strong. And then here's the thing. Here's where my bear case on the Max 7 doesn't come true. What if NVIDIA raises Q3 guidance? Because my bear case rests upon CapEx going up, but not seeing ROI. But if CapEx goes up and NVIDIA says they raise guidance, we definitely know NVIDIA is going to crush. And NVIDIA on the call, I think NVIDIA and Jensen on the call can easily make the street not have the concerns they had about CapEx going up with no ROI, because we know in Q3, Google's going to raise CapEx if they keep spending, and the street's going to be like, well, where's the ROI? It's going to be the same dance they've done with Google, Microsoft, Amazon, Meta for the past 4 quarters. If Jensen just comes out on the call and literally says to investors explicitly or implicitly, guys, this shit is real. Give our friends some time. Give Google some, if I was Jensen, I would just straight up say that. I would be like, hey, you guys are so concerned about hyperscalers. Have some freaking patience. They are building out the next generation of the internet. Sit back, enjoy the ride, and give them a shot and let it play out. I don't know if he would be that, explicit, but if he was, maybe the tone of a lot of these analysts that are so bearish on no ROI on CapEx, which quite frankly, they're just being impatient if you believe in the AI thesis, maybe they stop caring that Google's spending on CapEx and they just be like, all right, that's just what they have to do. So if NVIDIA can really raise guidance and effectively communicate that this is not a joke, AI is very real, Google has to keep spending money, and you guys freaking out every 90 days about them spending money without seeing an ROI is actually stopping them from getting momentum, that's not good, right? And I think that would hopefully be strong enough to get the street to change their tone. All right, Robinhood at 1995. We got 5 cents into the 20s. Let's see if we can get there. Palantir 3136. QQQ. Wow, Nasdaq's up 2% on the day. Tech is having a great day. Short QQQ must be down 5%. That is down 6%. There you go. ARM is up 3%. Nubank up 4%. SoFi 691. Trying to go back to 7. Dolores. Tesla 214. Wow. Holy crap, dude. Tesla 214 is incredible. Not bad. I didn't even realize Tesla was at that level. VIX below 15, correct. VIX is below 15. Amit, what about Grok 2 beta? I've been using it on my phone, and the images is actually really good. On my desktop, it's not producing images, but on my phone, it's producing images. If you guys have a prompt, let me know, and I'll put the prompt into my phone, and I'll show you guys. But Grok 2 has been, it's been good. And here's the other thing about Grok, dude. Twitter has distribution. So now when you like get a picture from Grok, and then you can tweet it immediately. ChatGPT, you can't just tweet it. You can't share it immediately. So Grok does have some build, and then that's getting more people to use Grok because they want to, come up with their photos. So I think Elon has a built-in advantage there. Clean Spark up 5%. Where's Bitcoin? Bitcoin is up 2%. Bitcoin trying to make its way back to 60,000. IWM, TNA is up 7%. IWM is up 2.2%. So small caps getting some love. Snowflake's now green. Celsius up 5%. Alibaba up 2%. Let me pull up Alibaba earnings because I haven't looked at that yet. But I think their earnings weren't horrible today. Indian man eating mayo out of a tub. I'm afraid to type that in, dude. I'm afraid. Well, here's the other thing about Grok. Grok is not as Alibaba's up 2%. Grok is not being as sensitive as ChatGPT. So, like, if you could ask it some wild shit and it'll say some wild shit, dude. Like, it'll show a crazy picture. That's wild. Kris sold out of his TQQQ the other day, but he did have some, but he sold out of it. I think he sold out of it yesterday morning. He sold out of it and he put it into something else. But yeah, TQQQ is doing very, very well. Amid eating a medium well steak in the gym. I like that. So let's do show me a guy eating a medium well steak in the gym. Show me a picture of a guy. Okay, let's see what it comes up with. Let's see what it comes up with. Basically, everything is up, correct. Wow, look at this dude. This is not bad. Look at this dude. This is pretty legit. Look at this. Look at this, dude. Look at this. Okay. This is not bad, dude. Look at that. I don't know if it's medium well. It kind of looks medium well. They just put a regular steak there, but that's not too bad, bro. And again, more and more people are going to tweet that stuff out. More and more people are going to get more people to see that stuff. And then boom, there you go. So yeah, I think it's getting really fun. And I think people are going to start propagating it even more, which is exciting. Okay, so Alibaba, let me get up their earnings real quick. So revenue up 4% year over year, missed expectations. Cloud is up 6% year over year. EPS down 5% year over year. Chinese commerce retail down 2%. Customer management up 1%. Direct sales down 9%. Chinese commerce wholesale up 16%. Adjusted EBITDA down 1%. Revenue 6% in the cloud. Adjusted EBITDA up 155%. CEO says our focus on enhancing user experience by offering quality products at attractive prices with great service to stabilizing market share. As we return the business on the growth trajectory, the cloud business achieved positive revenue growth momentum. We continue to invest for growth in our core business, says the CFO, while reducing losses in other businesses and maintaining operating efficiencies. Not a horrible quarter. Not a horrible quarter. Seems like they're getting back to free cash flow positive as well. Robinhood right here, 1995. And so that's why Alibaba's up 2% on the day. Amid, he looks like you. His muscles aren't as big as mine, though. Right? Like you guys saw me when I was wearing the yellow shirt on Sunday. Like my muscles are a little bit bigger than that. But yeah, it looks like me to an extent. I'm just kidding. But yeah, it's cool, dude. I think it's going to start propagating it a lot more throughout the ecosystem. Where's Grindr? Is Grindr getting some love today? 1997 on Robinhood. Grindr is down today. Okay, so Grindr's down. Nvidia 120. Dude, Nvidia's about to hit 122. Oh my, 10 cents away. Holy crap. Robinhood 1995, still struggling with 20. Again, if we get the volume, I think we're going to break through 20. I think it'll be like a pretty violent breakthrough if we get through it, because there's just not a lot of resistance. Like after 20, it should be pretty easy to keep going further. So let's see if we get there. Amid Grindr is your home screen. That's funny. Very funny. Guys, you guys know my home screen is basic, dude. It's like these, it's like colors. We talked about it before. It's the most gay home screen that I could ever have. Like, and I'm not motivated to change it ever. Like, I just keep it. By the way, I finished season 2 of Prison Break yesterday. I'm telling you, if you haven't given the show a chance, yeah, it's a good show, man. It's a good show. I really enjoy it. Prison Break is what I use to escape the stock market and just focus on something else. And it's a good show. I'm getting close to putting it up into my top 5. It's not above Dawson's Creek yet, but it's there, and I like it. S&P 550, QQQ 471. Now we're seeing a little bit of a red candle right there. So we're seeing some red candles. Makes sense. 11 a.m. We're going to probably get some volatility right here. Robinhood just went down to 1986. Meta went down to 530. Yeah, everything across the board, red candle. It's so crazy how the stock market works, dude. Everything across the board sometimes just falls together. Season 3 is ass, really? All right, I guess we'll see. We'll see. So far, it's been a good show. How long are you going to ignore ASTS? Guys, I am not ignoring ASTS. We've talked about it many times. I know it's up 28% today. I know it's up 2,600% over the past month. I don't know what to say about this. I am not, you have to be out of your mind if you think I'm going to buy a stock that in March was $1.97 and today is $26. I'm very happy for those that got in. I am not buying this. There is no way in hell I would even think of putting my money there. I mean, like you go from $2 to $26. I missed it. I got left out. It is what it is, right? I'll handle that. But the price to sales is 13,000 on ASTS. Whether that's overvalued or undervalued, I will let the market decide that. But I am not stepping in and buying that one. So yeah, although it's cool, it's awesome. It's just there's no way. Am I wrong on that? There's just no way I can think that's an exciting opportunity now. Although it's really cool. I know they got a bunch of deals. I know they're doing stuff in space, satellites, all that stuff. Amazing. It's up another 28% a day. It's at this point starting to become a bit meme-ish to me, but that's okay. Because if you got in early, enjoy the ride. But I just can't take a chance on it, dude. Like I don't have the money to gamble with on something like that. But if you're in it, congrats. Now, my thoughts on chasing it here is that it's a little scary. It's a tiny bit scary to chase something that's up 2,600%. Now, if it's going to be the next NVIDIA or something and the growth is not slowing down, then maybe this is like the right time to get in, but I don't know if that's the case. NVIDIA falling a little bit right here as well. They just got a red candle. Everything in the stock market, when you see a red candle, almost across the board, you get a red candle. NVIDIA is down about 50 cents right here. It's almost at 122. But if you're in it, congrats. If you're in it, congrats. UBS upgraded them to 30. Well, there you go. That's why they're up. Now, the fact that UBS is upgrading a stock to 30 when it's basically, when the price of sales is 13,000, it's reminding me of Enovix. Again, I don't know enough about them, but Enovix up 4% today. Enovix, again, is basically a startup that's public, but they got so many deals with like Apple and Samsung, et cetera, that the street's giving them a crazy multiple, even though they were at $20 like 5 months ago. So they have fallen a bit, but which tends to happen, right? You tend to take a little bit of a fall after you go up them. But yeah, they were at $18 on July 16th. So when we went risk off, one of the things that fell almost 50% was Enovix, which is a startup that is public, that is getting investors to invest in it because they're getting deals, but they're not putting up the numbers. I think that's the exact same thing with ASTS. So you just have to be careful with how that one ends up playing out. Robinhood 1988, still up 6.5% of the day, and Palantir still at 31. Multiple is irrelevant pre-revenue. I agree, but the multiple becomes relevant when we go risk off or when people just think like, I need to take profits, right? Because the first thing they're going to sell is something that they don't care about that's up a lot. Like if you're up a lot on Palantir, do you sell it? Maybe, but you also realize, well, I think there's potential and you know about Palantir. If you're up on ASTS and you don't really know why, but you just got in and you ran with it and you realize, well, they don't even do any revenue, like they just have some fancy deals. That's probably one of the first things you trim, right? And that's what we saw with Enovix. I mean, that's the chart went down 50% because most people don't know what Enovix does. They just bought into it because they hear about a deal with Samsung and they're like, oh, this is going to do well. And that's not a horrible reason to invest in it. I'm just saying you have to be good at timing when you leave it because then on the exit, it can get pretty quick to the downside. Yo, Jordan Lee, have you got the carp hat yet? Can you message me on Twitter? You're the one who, if I'm not wrong, you won the carp signed hat. Let me know if you got it because Eliano sent it out to you. I know Benny got his in the UK, or you can just put it in the chat. You don't have to DM me, but in the chat, let me know if you got the if you got the cap, and if you got it, just to get confirmation on that. I'm up 190% and not selling a single share. Yeah, and it makes sense because you understand what's happening with Palantir, right? So I think a lot of people that understand why they're up, they're probably not going to sell it. S&P 500, dude, is at 550. Just incredible, man. This thing was 507. This thing was $507. $507, bro. Now it's at 550. Like, it's just, it was at 565 at the top. 550 is a big psychological level. The bulls are in control right now. And they are saying, hey, we don't think the Japanese carry-on trade, unemployment data really mattered that much. Okay, let's hear from JP Morgan and see what they're saying as well about the street.
Thanks very much for having me.
How are you thinking about this so-called growth scare given this morning's prints, or this week's prints?
You know, we were always a little bit skeptical that the economy would just sort of suddenly, spontaneously turn down. I think we obviously have seen a deceleration from 2023 to 2022, but that's fine and to be expected. The economy grew over 3% last year. Job creation was very rapid because we were in the midst of this big immigration boom. That's cooled off a little bit, and we seem to be converging toward something more like a normal growth pace in the low to mid twos, but certainly a long ways from actual decline. That's what this morning's consumer spending data suggests. And I think all of this has a lot of implications as well for what's been the big debate for the last couple of weeks. How healthy is the labor market? Because if final demand is growing at a good pace, it would be very odd if companies didn't need more workers rather than fewer. So we continue to think that everything's working out pretty well.
I noticed you keep chipping away at your core PCE forecast. What are you down to now?
We're now down to 13 basis points after this morning. We had a big decline in international airfares in the import price data. That will flow through. So another soft month. I think the bottom line is we've solved the underlying problems here. We rebalanced the labor market. We got inflation expectations back to normal. We actually had really done all of that by last year. It's just that these inflation reports can be a bit bumpy from month to month. We think there are some seasonal adjustment problems as a result of the big fluctuations from the last few years. That created some upside in Q1. We've seen some softer prints more recently, but we're trending in the right direction, and I think you need to zoom out and focus on that.
As for the labor market, what is the line that sort of delineates danger from safety, so to speak, coming up in this next print?
Yeah, we're thinking that the July report will turn out to be a bit of an outlier, that job growth is probably running more like 150K, that the increase in the unemployment rate reflects an inability to quickly digest what has been a huge surge of immigration, but one that's now cooling down, but that it's not reflective of overly weak labor demand. So if we see job growth come in closer to where we put it, trending at around 150,000, if we see the unemployment rate stop rising, or we think a bit more likely come back a little bit as some of those temporary layoffs reverse, then I think things would look fine. The Fed would feel good about where we are. And I think markets and Fed officials and we would agree that in that circumstance, a 25 basis point cut seems right.
Okay, so let's hear from the professor now. So we got, as you guys say in the chat, the intern's take. You guys are mean, dude. You guys called him Marco Rubio. You guys are, thank you for being nice when Eliano was here, dude. You guys are ruthless. All right, let's hear from the professor.
Sir, it's great to have you back. How are you?
I'm fine. Thank you, Scott.
You, of course, made headlines and then some on that Monday morning when the markets were under some severe pressure. We were worried about the economy. We're worried about the unwind of the carry trade. For all of our sakes, let's revisit this. I want our viewers to listen to you from that morning on Squawk Box and what you said, and we can talk about it on the other side.
This may surprise you. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum.
All right. So I think you walked it back a little bit with our own team on .com. But do you want a do-over on that? You wish you could have that back?
No, well, I think it came off that I thought the economy was falling apart, which I didn't. I wanted to shake things up. I didn't want Powell to make the same mistakes on the way down as he made on the way up. Listen, Jan is right. We are just about at balanced risks. If you're at balanced risks, the Fed itself says the Fed funds rate should be 2.8. I wasn't even moving anywhere near there. All the forward-looking models, the John Taylor model, that you go on and on, they're all pointing to 4 or less. Now, yes, it isn't to do an emergency cut is out of the normal procedures of the Fed. I just am saying that with risks balanced, why are we still at double what the Fed says is the long-term rate? And okay, we don't have to do emergency and then 75. I just don't want him. I don't want Powell to go too slow. Yes, the data came in better last week, but I think the risks are fully two-sided. Why aren't we down?
I mean, we've all been there, I think, in life, right? Professor, if you say something, you wish you could have it
yeah,
back.
I mean, I know when I came back, it said, Dr. Siegel thinks a disaster is coming. And I just want, and yes, that I would have stated it differently now, saying, listen, we should be down in the 4%. Now, calling for emergency and 75 is so out of the realm of what the Fed generally does, which, by the way, I think the Fed generally acts way too slow. So I was sort of trying to push them into some more speed. But yeah, I wouldn't come on as I did right there in the grips of the panic. And by the way, I didn't say there was a recession. I didn't say it's a bear market. I didn't say dump your stocks. I'm just saying that when I look at the risk today, I see very little, if any, inflation risk. And if there is risk, it's on the downside. And I ask myself, why have we not moved 1 basis point?
Are you surprised, like many others are, at the magnitude and the speed of the snapback that we've had for stocks? We're having this conversation. The Dow is back above 40,000 for crying out loud. I don't know if many people saw that happening a week ago Monday.
Well, certainly, I mean, we got great economic news. I mean, certainly the ISM service came out that afternoon, eased fears, and then the jobless claims, which had been rising. And I've often said that when it starts moving above 240,000 a week, I begin to get worried, and it was, and then it fell below. I mean, that did surprise me. So you can, heave a sigh of relief. But let me put it this way, Scott, just because if you're going 90 miles an hour and don't have an accident, okay, you're lucky, but doesn't mean you shouldn't slow down. And it doesn't mean that the Fed should say, hey, 5 1/3 is just the right rate for the Fed funds rate, because I think given what I see in the labor market and particularly the inflation market, we got 2 good readings, certainly yesterday and today. The government itself has come out with several experimental housing shelter price indexes that don't have the lagged effects of their official ones. And when you plug those in, believe it or not, you are at or even below the 2% level if you put in those new indexes. So given all that, I'm just saying, just don't rate. Why? The risks are on that other side, given you haven't moved.
Power E-Trade's easy to use.
Interesting. So I don't blame the professor on August 5th for being, look at the S&P, dude. The S&P is about to hit intraday high, 551.28. I don't blame him for being super, super like emergency rate cut type of sound the alarm. The reason I don't blame him for that is because although obviously it was like the wrong way to approach it and it did feel a little aggressive, I don't blame him like crazy, because that was the first drawdown we had all year. And that was the first major drawdown we had all year, right? The first time we really saw some red and some panic VIX in the market, etc. However, if you're a seasoned investor, you kind of you kind of don't yell fire in the building, right? Until you kind of in the crowded room, you don't get people to feel super upset. You tell people to buy the dip and get excited for it. So his approach was to make Powell, who listens to this guy, because Powell obviously cares about these figures and how they think about public policy, even if he doesn't take their advice, he does listen to them. He wanted to send a message. And at that moment, look, if we had not recovered from 507 on the S&P, if we were still at 510, I think you would have more people call for an August rate cut, because technically we know we should have had a cut in May. So like, it's not, that's why I say I don't blame him for the logic of an August cut, but obviously when there's that much panic for a reason that's relatively, I guess, ended up not being that significant, which was the Japanese carry entry, even though at the moment, because it was the worst crash since 1987, it felt that significant. You can at least empathize with why someone's super, super like scared at that moment. But if you bought the dip, then you got momentum. Jordan says he got the hat. All right. Awesome, Jordan. Awesome. Happy you got the hat. Awesome stuff. So I guess we'll see how this plays out, but I am curious, dude, for a lot of the other public bears, when do they say, yeah, that it were soft landings on the table? Like, where's the next piece of macro data that ruins the narrative? Where's the next earnings data that ruins the narrative? Because honestly, dude, Walmart was the last earnings before Nvidia in 2 weeks that I think the street really cared about. Like, the street doesn't care anymore about, next week, I don't even think we have anything interesting on earnings. Walmart was the big one. And so now that Walmart's out of the way and they crushed it this morning, then you got to ask yourself, what's the earnings data that's going to be like bad for it? Like next week, we have Lowe's. Lowe's should be fine. If Walmart's good, Lowe's and Target should not be horrible. Maybe they're a little bit worse, but they shouldn't be that bad. And we have Zoom. Street doesn't care about that. Intuit, that doesn't matter. And then until Nvidia, it's really nothing else besides that. So if we got through Walmart and we only have Nvidia left and we don't have a crazy amount of data to that the jobs data that's going to be to the downside, maybe the street ends up really seeing that 507, that Japanese August 5th day when things unwound was the bottom. 1986 on Robinhood. Palantir just went red. Palantir 3085. So it doesn't surprise me that Palantir goes red, because again, Palantir's up a lot for the year. And so if we push 32, that would be exciting. But at some point, like, I would just like to be in the 30s and consolidate here without going crazy, because then, you're just not, that's not going to be sustainable. If we went to 33, 34, there's no way that's sustainable. So I think if we keep closing above 30 for the next couple of weeks, that is actually building a base to get to 31, 32. So it makes sense that it's falling a little bit. Now, granted, we could rebound right back to 31. It's only 11, 13, right? You might just have some intraday selling and we rebound quickly. But holding 30 to me is the big thing for Palantir, given it's already up a lot, right? It's already had the earnings run. So now it's just a question of where it continues to go from there. Yeah, Palantir tanking. It's not tanking, obviously. It's down 0.25. It's down 8 cents on the day. It's not tanking. But we're getting greedy now, and we want to see 35. It's crazy, dude. It's because sometimes you have to remember, like, wait, they actually need to have earnings growth to like justify a lot of this stuff. But I think the momentum on 30 is the most important. S&P at 5. S&P is about to hit an intraday high. S&P is like 10 cents away from hitting a intraday high. Wow, 551.48 on the S&P. Kris just said, if I can call him, I'm going to put Kris on the phone. Let's get his thoughts on the macro and see what he thinks about the data that we got today.
What's up, dude?
Kris, how's North Carolina?
It is actually really nice. The weather is amazing today. But more important than that is that retail sales number, which pretty much confirmed everything.
Dude, Kris, we are such nerds, dude. I ask you how's North Carolina, you're like, it's good, but this retail sales number, like, we are such nerds, bro.
Bro, I am always thinking about making money. Like, I go to sleep thinking about making money. I wake up thinking about making money. Like, my entire life was based on, like, I'm pretty sure my wife was annoyed at the fact.
I had to pull his phone away last night on the beach while we were waiting for the stars to come out. I had to pull this man's phone away.
Yeah.
Wow. You were trying to see the stars and you were fucking checking your stocks?
I wasn't checking the stocks. I was looking at all the data that I could possibly figure out, like, what the hell was going to happen, bro. That's the name of the game, man. You're never really disconnected from the world.
Look, but I can't complain. This vacation is sponsored by Vader Capital.
That's right. It is.
All right, Kris. Well, we've got some people here on the market open. We got retail sales go up 1%, jobless claims lower than expected. What was your take on the data today?
I thought it was great. I mean, it pretty much confirmed that the consumer, there probably is some consumer weakness, but it's not as visible as people are making it out to be. And I think a lot of people ran with one data point and just sold this market too quickly. Like me and my wife, we were at this place called Hurricane Moe's yesterday, and the entire place was packed. It's like a Wednesday at 5 o'clock. The entire place is packed. But one thing I noticed is the majority of the people there were like older boomers. Dude, boomers have money. They're spending it, and so they're keeping the economy pretty much going right now, especially like tourism and stuff. So right now, one of the things that we're seeing is not only are we seeing the retrace in growth tech, but you're also seeing a retrace today huge in consumer discretionary. So if you're looking at if you have your portfolio pulled up, you can look at the cruise lines, because I've been kind of bullish on them, and they retrace back down, but they're also gaining the momentum.
Oh wow,
higher.
Carnival's up 5% today. Look at that.
Yeah, same thing with Norwegian and Royal Caribbean. So I think what it is a lot of them got sold off because people were scared, like, oh, consumers weakening, so people are not going to travel. We need to get away from them. And now you're seeing this recovery happen in a V-shaped pattern. And I think this is going to go on for the next 30 to 60 days until there's any other data that proves to the otherwise. So right now is even though it feels like, oh, did I miss the bottom? Dude, bottoms are not always you're never going to hit 100% bottom. Right now, the momentum is going in that direction. That is the place that I would personally, I wouldn't say recommend, but I'd say, people should look at, which is look at tech that got oversold, that primarily deals with the consumer. As an example, Amazon. Did Amazon deserve to be at 160 and then the 150s? Absolutely not. Even after crushing all of their earnings. Same thing with a lot of these other companies like Booking.com and all. So the consumer is not as weak as people are thinking. So I'm glad me and you, we brought some semblance to the market when everyone was yelling fire in the room, even including Jeremy Siegel and even some of the content creators out there that were like, oh, this is it, we're going to all die.
Are you throwing some shade, Christopher Patel, right now? Are you?
I'm not throwing shade. I'm just saying sometimes what it is when people put fear out there, that's what makes people just go absolutely crazy and sell out of great companies, right? Now, here's the thing. I can understand if you're analyzing things from a micro level company and saying, look, I think this company might be overvalued, blah, blah, blah. But at the same time, you have to very much keep in mind that that's company specific stuff. A lot of these other people, they're just generalizing everything. Everything is falling apart. We need to get emergency rate cuts. And I'm like, off of what? One data point that seemed a little bit hot? Come on, use some logic here. But then again, think of it this way. If these people don't yell fire and cause a fire sale, guys like me and you who've been literally picking shit up. I literally ran out of cash. I told you, I almost broke into my wife's emergency fund to buy more stock.
Dude, no, I felt the same, dude. Although it was a tough day, you and Steve joining the stream that day was really important for me because obviously you guys are much more experienced than me. And when you guys came on the stream, I think we had a 2-hour additional part of the market open, and you and Steve basically were like, this is stupid, and that gave me a lot more confidence to buy the dip as well. And it didn't feel like the world was ending. And so if you doubled down during that time, you've obviously done well. So let me ask you this. What piece of data could you expect in the next month that could totally flip the narrative in the favor of the bears?
Right now, I think the biggest thing that's flipped is we were tracking inflation. I think inflation is no longer worth tracking anymore. I think instead we should be focusing on two things: unemployment and retail sales. Because what it does is it shows how the economy actually is operating. Because the inflation dragon has been slain. Let's just get that one out the door, right? Now inflation is going to moderate on its own. It's already
you don't think there's any fear about inflation anymore?
No, the glide path is already set. You can already see the major indicator that we needed to really go downwards for inflation to come down with shelter. Shelter makes up such a big portion of it. It impacts everyone. So shelter right now is already starting to moderate. Even if you look at it on an owner's equivalent rate, it's still on its way down. And a lot of that data, as we've been saying for the last 6 months, it comes with a lag, right?
Yeah.
So as long as we kind of look at what's going on today, we can kind of like stay one step ahead of even the Federal Reserve. Because the Fed doesn't even actually look at real-time data. They're looking at all this owner's equivalent bullshit, which is a really stupid metric to use. But whatever, if that's what they want to benchmark and that's what moves the markets, then fine. Let them use that. We'll look at the forward-looking data, which gave us the edge compared to even the Federal Reserve, right? So
Right.
I think right now we're in a glide path of inflation coming down. I don't see any reacceleration. I do think that maybe the decline in inflation, they need to make sure that it doesn't like become too vertical. Like you don't want it to go from like 2.6 to like 2.2. You know, I would rather have 2.5 than 2.4 than 2.3 than 2.1. You know, like something that's more controlled descent rather than something that's immediately falling apart. Because if anything is falling apart immediately, that means the consumer and businesses are pulling back significantly, and that pretty much means that we might be in a recession. But as of right now, soft landing is the way that I would probably project out us going.
And Walmart
And
earnings
a lot
kind of showed that as well to you, right?
Yeah. I mean, this is literally a stock picker's market, right? So you just have to find the great companies. You find the consumers that are not weak, and you invest in those companies, and you just hold tight and, you know, let things happen. Like Robinhood was a great play for you, especially when it pulled back to 14, 15. I wish I could have bought some Robinhood, but dude, I was capped out of cash.
Yeah.
One of the tragedies that you're always going to run into is when the opportunities come, you don't have cash.
Yeah.
You know.
So what happened when you asked wifey? What did she say? Did she say get out of here?
No, she would have been okay with it, but I didn't look, she's a lot more like risk averse. So, but the one thing I did do was I took her entire portfolio and I put it risk on her retirement account.
Right.
So I was like, let's go. So that's up like nice 10, 12% in the last like week, you know, so.
Okay, so let me get your take, and then I'll let you get out of here and get back to vacation on Druckenmiller selling big tech, Ron Barron selling Tesla, Buffett selling Apple, and then Bill Gates, selling Microsoft, and then Bill Ackman selling Google. Are they trying to tell us something?
Well, remember, they sold last quarter when valuations were kind of up there. I wouldn't be surprised if we get a 13F that's updated next quarter where all these idiots bought this shit back again. I mean, these are smart people. They see how the market is. So when you see the great companies that they've had do absolutely amazing for the last like year and a half, 2 years. So some of these positions were opened up almost 2 years ago when the things were oversold. Like look at Google, right? Ackman bought that Google position in the 90s. So he's sitting on a lot of gains. And the thing is, he may be saying to himself, look, at this point, the valuation doesn't make sense at like 180, 190 for him, where there's not as much juice left. So he's like, I'm going to look for other companies that are undervalued so I can ride those up higher. Because remember, if you're performing the market, you're basically not worth putting money in.
Yeah.
These guys have to beat the market. So how do you beat the market? You have to go against it sometimes, you know, and basically choose the thing that's going to give you the highest possible rate of return in a way that's, you know, justifiable to their shareholders. Well, not shareholders, I don't know, like their LPs, and making sure that, hey, look, I'm getting you market beating returns. So if you're telling me like, hey, if you bought Google in the 190s and the 200s, and you're going to see a lot of alpha from there, probably not that much, right?
Right.
So I think a lot of them are just repositioning themselves to capture the most opportunity. And I think they see a lot of these other companies as being way more opportunistic in a further increase. Like, look at the companies that these guys bought, like Nike. Nike's been beaten.
Yeah, I was going to ask you, why do you think he bought Nike?
Because he sees that it's a value play. Like, it's been beaten down significantly. He's like, the cash flows are strong. You know, right now the market doesn't see a lot of like strengths going forward, but he sees that there's value there, so he's buying into it. You know, I mean, that doesn't mean that he's right, by the way. All right, a lot of these guys, when they move, they sell successful position, they move into weak positions. I mean, how many of these guys sold Palantir at, you know, 16, 17 like I did, and then missed the 100% run up?
Right.
You know, because they were too dogmatic in their way of thinking. That's just how the market is sometimes, where people will figure out values for companies that they have, and then after they get to a certain price, they just
They're just like, hey, listen, this is the opportunity's done in this one, and I need to move to something that has a higher opportunity. And look, sometimes it works out and sometimes it doesn't. For me, like when Celsius got to 96, I was like, wait, no, my price target was $100 for Celsius by 2026. That shit went up to like 96. So I should sell. There's no point of me holding on to this for a 4% gain.
Right.
And that was the smartest move at the time, especially with all the slowdown happening. So, you know, a lot of times people will say, well, you know, these guys, they're just paper handing it. They're flip-floppers, blah, blah, blah. But no, it's just that they have a thesis. And if the thesis gets proven correctly in a very short period of time and they don't see much alpha going forward, they're going to trim and go into things that they think are worth, you know, a higher return, you know.
Do you have 2 more minutes?
Yeah, of course.
Ulta. Any thoughts on Buffett buying that?
I think the guy sees value. You know, the guy's a value investor. So he's looking at Ulta. He's looking at the beauty segment saying, look, I think from a cash flow perspective, these companies are generating good amount of return, right? And to some degree, they're recession resistant, right? I mean, who doesn't do their makeup just because there's a recession?
So you knew about this lipstick index thing?
I didn't know about it. I mean, I don't do research in the sector as much. The only one that I've been really like keeping my eye on is Elf.
Yeah.
And Elf primarily because like the way that they're doing things is very interesting to me, where they are taking high quality products and selling them at a reasonable price. And they're getting a lot of distribution everywhere, which means that they can potentially undercut a lot of these other major brands. I mean, that's a good business model, especially if you become disruptive enough. My wife bought a couple of Elf products. A dupe.
They make a dupe product.
What's a dupe product?
Like if something's high end, they make a more economical version of it.
like the supermarket brand version of ice cream versus the actual
yeah,
ice cream.
kind of like that. So like if Dior has a really nice foundation, then Elf is like, oh hey, look, we have this dupe. Or like a really nice lip gloss, like let's say Rare Beauty has a nice lipstick. Elf would be like, oh, here's my dupe, or here's my primer dupe.
By the way, why the hell do you call this thing foundation?
Because you build on it.
I see.
Build your other products on it.
Gotcha. I was confused. I was like, foundation is like, what the fuck? Why are you calling makeup foundation? Like, I didn't
We're
get
not
it.
putting cement on our faces, although some people.
Okay,
I don't wear a lot of makeup, so but I do know like there is a difference in the quality of the delivery devices though, because I bought an Elf primer and a setting mist that was like incredible, the spray, but it broke. The nozzle broke and now I can't use it. And I'll hold this whole bottle. So if I would have bought the high end, maybe it wouldn't have broken so easily. I don't know. But some of their stuff is good. I mean, it you can't really tell a big difference. I mean,
yeah, I mean, if you're getting good quality stuff at a reasonable price,
I say
decent quality stuff at a reasonable price, that's disruptive, right? That's what you look for in a business, a disruptive.
Cheaper, more people can use it.
Yeah, cheaper, more people can use it. I mean, that's a disruptive business where these other makeup brands, maybe they got a little bit too complacent. And so a lot of people were switching to it. I mean, you see it in their revenue numbers. They're growing, obviously. So, you know.
Are you still buying into small caps?
Yes, but I'm being very selective. So I remember a lot of people are very like bullish on just IWM, just buy in general. I'm more like, no, among the small caps, you really have to dig in deep because there's a lot of crappy companies in the small cap space, especially that are still alive from the SPAC days that are still not doing very well in terms of like business, right? And they also have a lot of debt on their balance sheet. So I'd say if you're going to go into the small caps, you definitely have to find the great companies within the small caps rather than just picking the index. I mean, you could theoretically do the index, but once again, if you're trying to beat the market, you're not going to be able to kind of do that if you're buying just the index. You know, you have to be meticulous. Like, think about you personally, Amit. Do you think you would have got as much return over the last 2.5, 3 years had you not picked individual stocks and just put your money in the index instead?
No, probably not.
Right?
No.
So all that fundamental research that you did and you presented to people, all of that stuff led you to these great companies that gave you the ability to outperform the market. And then we together, we strategize on how to actually use some other strategies, especially with options.
We leveraged up the ass, baby.
Huh?
I said we leveraged up the ass, basically.
Yeah, we did lever up the ass, but we did it in a way where it was like, you know what, this company is too fucking oversold. It looks too fucking good to be against it. So I mean, this is just how it is. And one thing I just want to mention to everyone on the stream right now, a lot of people will say retail investors, they're just a bunch of trend chasers, blah, they never really make any money. And that's not true, dude. Back in the day, retail investors didn't have access to the information that we have today. And right now, I think retail investors have so many more advantages than even these hedge funds do.
Yeah.
So right now, crowdsourcing data, crowdsourcing information, you as a retail investor could go online and literally just type in a few things, and you have more data and more time to research and be part of communities that can do all this fundamental research and then make some decisions for yourself that can enable you to, not only beat the market, but fucking destroy the market in terms of total return.
Yeah.
Yeah. Hold on.
Hey, Amit, one thing about Elf, I think the reason why it's so successful lately is also one of those crowdsourcing type of plays, because on Insta and TikTok, they do these side-by-side reels, like these makeup artists who are putting more content out, and it's become viral to do like half your face in high-end products and half in like more, what's the word for it?
Budget-friendly
products.
Really?
And then, yeah, and so then you can see like, oh, hey, there's no real difference. But then again, so I might look at that and say, oh, why am I spending $50 on this concealer when I could spend like 15 or 12 and get it else? At the same time, though, I will say you're putting this stuff on your face, so it has to be like good enough quality to not mess your face up, Right. But I think that would be something too, because I've seen a lot of that. Recently.
That just goes to show that like guys like me, you, Steve, we can crowdsource data and we can actually be a lot more in tune to the everyday person and get investing ideas that way.
And dude, Kris, this is really true, because I could not for the life of me find the Bank of America upgrade on Robinhood. And then I messaged someone on Twitter who like usually has the connect with this. And I was like, yo, man, like, can you just find this? And he was like, and in 2 minutes later, he sends me the report, full report, institutional level research. And then I get to tweet it out. And it's like that, that is powerful as retail, having that opportunity to get information.
Yeah. Yeah. The gap between information availability between retail investors and hedge funds has shrunk considerably. I mean, I don't even think there's really that much of a difference left. The key thing is just being part of communities where people do good fundamental research, put the data out there, and then let the consumers decide like whether they want to pursue, that position or not. And like I said, I think that's one of the key things that you're developing. And that's why guys like Eliano and Vlad and everyone are coming onto your channels and giving retail investors a little bit more respect by giving them a little bit more attention, saying, look, these guys actually make up a pretty decent chunk of the market now. And they're actually sophisticated enough to actually understand where value truly lies. And it's not just a matter of, hey, we're just going to go on CNBC all the time. Like, no, like, hey, there's actually a community of people out there that have real money that can put money towards, great companies, where other people on CNN, they basically, you ever notice that about CNN, not CNN, CNBC? They was like, oh, we got to go. Like, bro, let the fucking guy have like 5 minutes. Let him finish his thoughts,
Yeah, it's annoying, and it's just, it doesn't allow the type of engagement that you can get when there's an uninterrupted stream, to just talk.
Yeah.
So
and guys like you ask good hard hitting questions that most of the time are unbiased, except for when it comes to Palantir, then you go fucking biased like a little schoolgirl. But everything else, you're pretty good. So yeah, it works out. Yeah.
All right. Awesome stuff. Chris's Twitter is in the chat. His Patreon is on Twitter as well. Yeah. When are you coming back from vacation?
I'll be back this weekend, but
this is like a 1 week thing, basically.
Yeah, a few days, like 3 or 4.
Well, you're staying at Airbnb or a family's, a friend's house or something?
No, actually, we decided to stay at a hotel.
Ah, that's interesting. That is interesting.
I actually kind of regret it. I wish we had stayed at an Airbnb, actually. Last night, baby next door was crying. This morning, someone pulled a fire alarm, so we went downstairs and the fire people came. It's to be honest, with the Airbnb, You get a little bit more room. It's a little bit cheaper. My wife could have been sleeping in the bed. I could have gone downstairs because I still have like some work to do for work. Right now, we're all just, it's just me and her like stuck in the room together. So it's nice and clean, which is nice. But at the same time, there's not as much flexibility as we would have gotten with an Airbnb.
Yeah, yesterday someone on Twitter posted they went to an Airbnb. Dude, it was infested with like some type. I don't know if you saw this post. So there is a little divide, around Airbnbs.
Yeah, it's definitely a hit or miss. Like you really need, like, if you get a good Airbnb, you're perfect. Like you're gonna have a great time. But if you get stuck in a bad Airbnb where literally it's just someone who treats it like, like a side hustle where they don't even properly clean it, then it's bad. Because then what ends up happening is you feel icky the entire time you're there.
Yeah.
From the minute you enter to the minute you leave, you're like, bro, I hope I didn't pick up some kind of like skin rash,
Yeah.
Yeah.
All right, Kris. Appreciate you, man. Enjoy the vacation. I'll talk to you later.
Take care. Everyone,
care.
enjoy your weekends. Enjoy the games. Take care.
Bye. All right, so that's Kris's take on the macro. Someone said, amid personal question, how do you think of good questions? I think the art of asking questions is actually really important. And like the Joe Rogans of the world, there's really a science to like really trying to figure out how to get into a good question. For me, I still think I'm learning, but I did debate in high school and that helped me a lot figure out like what is the best question to ask, how to like get into the nitty gritty of something. But it's important, dude, because as Kris was saying, like the reason these guys go on CNBC is because they like hope to get a good segment. If they're getting a good segment from someone like me or Tanner or, whoever else is in the YouTube world, they're probably going to come back and they're probably going to care to keep talking because they know they're not going to get some like stupid question. Like, when are you going to give a dividend? So I think asking a good question is very important. And it gives a lot of respect to the person who's answering the question as well. Wait, wasn't Vlad supposed to be on Fox Business today? I think that was supposed to happen. Let's see if that's up. If not, we'll play that during the market close. But I think he was supposed to be on with Liz. Oh no, that's at 3 p.m. No, I think that's later today at 3 p.m. Yeah, that's not right now. Okay, so we'll play that. We'll play that later on the market close, and we'll get some updated thoughts from him. All right, cool. I think that's pretty much it. June says, how is Meet Kevin's PP down 1%? Well, it's because he sold off a lot of tech, dude. He sold out of Robinhood, Palantir. He sold out of Palantir right before the run, right before earnings. Sold out of Robinhood, not sold out completely, but he reduced Robinhood, sold NVIDIA, AMD, etc. Just reduced the stakes in a lot of them. It is kind of crazy, dude. PP's down today on the market. I mean, what's down today? What's red? Grinder, that's low volume, so that's whatever. That's down. SQQQ, that should be down. Fortinet, that's already had a good run, so that makes sense that it's down. DNA, we know why that's down. Rocket Mortgages, so Meet Kevin bought this yesterday. Why is a mortgage company down 2.7%? I'm not making the connection. Does anyone have it in the chat? Why is I'm not making the connection. Why is a mortgage company? Because isn't a rate cut good for them? And today signaled, well, I guess the economic data was a little bit better than expected. So it signaled a less of a chance of a rate cut, even though we still all believe there will be a rate cut. But I guess if the chances go down even slightly, the algos go inverse on the mortgage companies. Because he bought a bunch of mortgage companies yesterday. That is, I guess that's why, because on a good jobs data, you would imagine that goes up a little bit. Kellanova, that one got sold out yesterday. Yeah, I'm struggling to find the red. United Health, a little bit red. That's defensive, so people moving to a little bit more risk on. Eli Lilly, Eli Lilly's up like 35% the past 2 weeks, so that one's taking a breather. Yeah, what else is red? Lockheed Martin is at all-time highs, but it's red today. Like there's where is the red in the market? I guess crypto will have some red. No, crypto's green. Everything in crypto is green. All the crypto proxies, Coinbase, CleanSpark, they're green. Mag 7, everything is green in the Mag 7. NVIDIA is at 122, Tesla 214, Microsoft 14, Apple 224, Google 162, Amazon 176, Meta 538. Meta's about to hit all-time highs. It's like $3 away. Semis, everything is green. Fintech, everything is green except this one doesn't matter too much, but Coinbase, Square, PayPal, Affirm, SoFi, Robinhood. Like really, where is the red today? SaaS, everything's green besides Twilio. Rocket Lab's up almost 5%. Yeah, everything's green. So I don't know. It is definitely hard to find a little bit of red today, and that probably means we're gonna get a pullback eventually. It's like it's just one of those days that's really green after a couple weeks of red at the end of July until August. But obviously the green is playing into the recovery from the really red day, which was August 5th. And this is also, by the way, this is great for Robinhood. Why? Because again, those July metrics, if you missed me talking about it yesterday, phenomenal metrics. Q3 tends to be a smaller, a quieter month for retail trading. July was off the chain. August, now that it looks like we're kind of recovering after retail bought the dip, they put in $500 million into Robinhood on Monday, August 5th. So $500 million in deposits to buy the dip. Now it looks like the momentum's continuing. If September goes decent with a rate cut, you might have Robinhood put up a 40% year-over-year quarter again, 3 quarters in a row. I mean, if they end up figuring that out, dude, it would just be incredible. That's why when it got to fucking 70, like there was a good, like, dude, I bought my mom a ton of shares at 17. I think I bought my mom 800 shares at 17. I bought my sister about 1,200 shares at 17. I bought my dad 500 shares at like 1680, 17, that range. I bought myself a lot more options contracts. Like when I said I was buying the dip on Robinhood, the whole family was buying the fucking dip on Robinhood. Because like this was just one of those where like I'm going down with the ship. If we're going to 13, then fuck it, we're going to 13. But it did not make sense at 15, 16. My mom actually got 1630s. My dad got like 1720. And then my sister got 1720, but my mom got the best price. I ended up getting below 15 with some contracts. So I think I got like 20 contracts below 15. But it just did not make sense. And same thing, my story with Robinhood is what a lot of people felt with NVIDIA when they got to 90. I mean, if you really understood the NVIDIA thesis, which I understand, I don't really understand enough to like buy the dip aggressively. Like when you buy the dip, it's supposed to hurt, but it's supposed to feel like, holy fuck, I'm at an ATM and I'm just printing money. Like that's what buying the dip should feel like. It should feel like, oh, this sucks. Like I have to buy the dip, but it should feel like, no. Like I'm literally like stealing money right now. If I don't feel like I'm stealing money when I'm buying a dip, I don't want to buy a dip because that means I have no conviction in the dip that I'm buying. So for Robinhood, I mean, like I mobilized a lot of people in my family. I'm like, no, dude, this is stealing. Like at 16, and we could still go back there. We could still recession. It could still happen. I just feel like long-term trajectory. I have options. They're buying shares for the long term. I feel safe that there's a lot of risk to reward here, and that there's potential. So yeah, I agree with Kris, man. When him and Steve came on the show that day and they really brought some senses into what was going on because they're a bit more experienced. Palantir at 31.15, then it definitely did help against the doom and gloom of that day. I'm Beneficial said, I knew I was stealing money buying Hood at 14.97 August 5th. Yeah, and you might be asking yourself, well, how do I have an opportunity to steal by buying the dip? It's because the market is the market and the market will give you opportunities. Like when I was buying Robinhood options at $8, I felt like I was stealing as well that day because I was like, all right, it's risky, but I really do think this is going to play out. And so the market gives you those opportunities. As Kris said, it was a stock picker's market this year. NVIDIA now above 122. Look at that. It's about to go to 123. It's about to be up. NVIDIA has gained basically $220 billion of market cap in the past 5 days, dude. Like Monday began this run for NVIDIA. So if it's a stock picker's market and you know your stock really well and you understand the thesis, then there should be some momentum. Those who bought Palantir at $20, I mean, like that was a great, like that was one of those things where it's like, hey, they have earnings coming up. This is stupid. We know they're going to accelerate growth. And that makes a lot of sense. Cause Why Not says he has an average of 1748 on Hood. First time buying the stock established a good position. For now looking to sell at 24, but not committed. Yeah, I mean, look, if you sell in the high 20s, I don't blame you either for Robinhood. Like the point is, I the sell is less important to me. The point is getting into the dip because it creates a mentality of like finding opportunities, and then selling is just about taking profits, right? One of the hardest things to do is like figure out when to take profits. So I think it's very toxic sometimes to take profits and then see the stock go up and then you get sad about it. Like it's profits are profits, and like to even be lucky enough to take profits in the markets where 99% of America, much less the rest of the world, doesn't even know what a stock market is. Like that in and of itself is a win to me. And then when you get really good at it, you get better at timing how you take profits. But I think buying the dip is a very important thing because this thing could have gone super south, not just across Robinhood, but across the board. I mean, if Japan really unwound and unemployed, like you could have had such a compounding negative effect that it would have ruined 2024. But there was just enough earnings growth to push back against that. Robinhood now at $20, there's 13,000 shares. So we still have some way to go to get to $20 at 1991, but I think there's a shot we can get there. My target for taking profits is 25, but again, remember, I'm holding options. So the high end of my options on Robinhood are 2026 spreads with a $20 short end of the option. So those are hopefully going to be in the money by 2026, I think, if Robinhood's above $20. And then 2025, the options, the short end of the spread is 25. So the goal really for me is $25. And if it gets there, then, now I double down on the options. The gains are going to be even stronger if we actually get there. So let's see if we get there. But that is where I'm looking at. But, if we're at 23 or 24 towards the end of the year, that would be a decent time as well to take some profits on those options. But the goal is to go long on the stock now. It's been heavy options, but the more I'm learning about the story, the more I'm listening to Vlad, I'm like, dude, if I was going to bet on a financial services company disrupting everyone, I don't know how I don't bet on Robinhood. And so the goal will just be to take that money, sell some puts, and scale into the position and find opportunities to build out shares. And I think Robinhood and Palantir are going to be the pillars of the portfolio for the next 5 years, dude. And I kind of think that's the right way to play it out. And then the goal is to get Tesla in there, have that be the third pillar. And then we'll see what other opportunities pop up as well. ASTS up 40% now. Yeah, I mean, dude, this is incredible. If you're in ASTS, congrats. Volume is only 28 million, which is kind of crazy. You would think volume is like close to 100 million. Where is GameStop in all of this? We haven't looked at GameStop. GameStop's up 3%. Okay, so GameStop and Chewy getting a little bit of momentum today. Chewy's up 2% as well. So they're up. Nvidia 122.27 right now. Not bad. Not bad. What a reversal. Shorts got absolutely smashed. Wonder how Meet Kevin is feeling. Yeah, I don't know, dude. I don't know. The reason I brought him up this morning is I want to see when he gets back into the market. Like I really want to see when he totally U-turns and he says, all right, forget it. I was wrong. Because he's been the only reason I'm saying this is because he's been so stringent on this bear. I've watched his videos, dude. I get through the 5 minutes of asking for the coupon code, and then I actually get into the video, and he's like sold that this is a recession that's going to happen. And I just want to see, when does he think, all right, I was wrong? Or when does he feel the data is not there? Because when you're that stubborn about it, a rally like this, like a day like this, it'll hurt your thesis, but it's not going to get you to be unstubborn. So when he becomes unstubborn and flip-flops, that means he's seen some data that's unequivocal. Look at the S&P, 552, 551.91. Goodness gracious. It's about to have one of its third or fourth best days of the year, dude. S&P at 551. It had its best day last week. So when he has that pivot, then we'll see, we'll see what happens there. And again, to his credit, he was right for the half of July when we had that collapse, and he made some good money there. It's just really hard to get back in, dude, and time it, right? It's really hard because then you feel like a genius. Then you feel like, nothing's going to go up or everything's going to go down. And it's hard to figure out how to get back into that level. But we'll see. We'll see how that plays out. 1993 on Robinhood. Palantir are we still above 21? Palantir. Oh, sorry, not 21. 21. 21 was August last year, bro. 21 was a whole different time. 21, Palantir was just learning how to drink. Now it's 31. Now it's taking 2 shots of Jack Daniel's Hennessy, followed by a couple shots of Patron. We're past 21, dude. We are in the 30s. Yeah, so 31.16, still holding on Palantir. All right, so I think that's it for me, guys. Another 3-hour stream. I think pretty much every morning we're doing 3 hours. So if you're ready every morning, I think it's becoming a norm. Basically, like 2.5 hours, 3 hours. The show has evolved, and we're gonna keep things evolving and keep trying to get some decent coverage. So we'll be back on the market close. Nothing too crazy today after the bell. We don't have any major earnings. Let me check real quick. Today's Thursday? We'll have money market fund data. Yeah, there's AMAT, Applied Materials, so we'll look at that. But outside of that, nothing too crazy. And yeah, that's pretty much it. Dude, Robinhood's making me want to stay. Is it about to hit 20? It's getting close to 1996, dude. Oh my gosh. I want to see it if it gets to 20. Let's see. It's up 7%. Let's see. Maybe we wait a couple minutes. Let's see if it has enough in it to get there. We hit 1997. 20 would be cool, dude. 20 would be super cool psychologically. Let's see. Someone says, I've been in Hood since November 2023. Still see so many catalysts. I think the economy is bleeding. Will sell. A recession will kill Hood, but blue skies and fair weather at the moment. Yeah, I agree. And if we do get a recession, I think it'll be a huge buying opportunity for Robinhood for the long term. Obviously, the whole market will be on a discount, but if we don't, then their momentum probably continues to go higher. 1996 on the Hood. AMAT is your heaviest stock in your Roth IRA. I don't blame you. I like AMAT. 1998. All right, let's see if we make that final push. I think if we break through, we break through. We just got to get the bids coming in at 20, but if we break through, we're there. AMAT should be important today, though. We'll see. How they're important in the semi sector. Amit, what kind of music do you listen to? Honestly, I'm a hip hop guy. I still haven't listened to Tool. I know I need to listen to Tool. I still have to listen to Tool. I like what's that band? What's that band? The Hotel California. Who made that song? Aerosmith? Are they the guys? Hotel California? Right? Eagles. Sorry. Eagles. I like that song a lot. Aerosmith's good too, though. 1998. But I like a lot of hip hop. I listen to hip hop. That's what I like the most. But I like some of those bands. 1995. All right, it's gonna be flirting with this $20 thing for a while, and then we'll see if we get some momentum and it can break through. But yeah, I listen to hip hop the most, and honestly, I only listen to music when I'm at the gym. Like I've never been that type of guy ever. That's like doing homework and listening to music at the same time, or dude, I have never legit, like when I'm sitting at my computer at my desk after the stream, like just doing work, I have never had music on ever. I can't listen to music while I work, dude. It's kind of weird. Now, a podcast, I mean, I'll get through like 8 hours of a podcast during the whole day while I'm working. But music, for some reason, it's just like I only listen to music when I'm driving or when I'm at the gym. It's very weird. It's weird. Like even when I was in high school, I tried to do homework with the music on. Like I just can't like focus when there's music. So yeah, for me, it's more hip hop, but only when I'm at the gym or I'm driving. All right, guys, I gotta get out of here. This is really good. 1995 on Robinhood. We'll see if that keeps going further from there. And I'll see you guys at 3:45 today. And we'll be back on the market close. We'll see if Robinhood can keep going and what happens with Palantir as well. All right. Thank you, everybody. 3:45. We'll be back and we'll keep going. Have a good one. Bye, everyone.